Cash equity trading. I'm Tom Mackenzie in London, and here are your top stories. Gazprom declares force majeure on some European gas buyers, reinforcing Russia's grip on EU energy supplies. Hiring freeze, Apple joins its fellow tech giants in scaling back headcount plans. Goldman Sachs will bring back its annual employee poll. Plus, a brutal heat wave. London may hit a record 40 degrees as extreme temperatures ravage Europe. Let's check in then on these markets. You saw gains of around 1% across European equities yesterday, but of course, a very choppy session in Wall Street. It was the Apple decision around reducing headcount that really sent the S&P lower, and you did see losses in the end at the close of around 0.8%. The future's pointing lower here by 0.7%. Let's switch it over as we also weigh up the data coming out of the UK in terms of jobs. The jobs numbers coming in well above the estimates as we again think about the response then from the BOE to this high inflationary environment, but also wages here in the UK not matching, coming in above 6%, but still, of course, not matching the inflationary rate. So at the real level, you're still seeing a pay cut for most workers here. The Spanish IBEX currently down 0.6%. The FTSE 100 down 0.6 as well. Iron ore and copper lower again. That will be weighing on the basic resources sector. The CAC current over in France lower by 1%. We look at EDF and the evolving plans around nationalisation of that utility company. Let's switch it on, see how things are playing out across these sectors as we weigh up as well reports from the Financial Times that the EU will be asking members to cut back on their gas demands. Again, concerns that that pipeline, Nord Stream 1, will not come back online on Thursday. The jury is still out on that. We wait for that decision as ultimately rests in Moscow. The futures in the US looking to gains of 0.2%. The US 2-year currently at 3.13, yields off by 3 basis points. Euro dollar at 1.01, gaining 0.3%. Brent at 106. Not a lot of movement on Brent, but as you say, comfortably above $100 a barrel. Let's go over to Bloomberg's MLive managing editor, Mark Cudmore. And Mark, you're looking indeed at European gas prices.
Yeah, absolutely, Tom. It's really the big issue this week. Will we see the resumption of supply in the Nord Stream 1 pipeline? What's going to happen to gas prices, whatever the supply situation is? And I guess that I want to show just quite how extreme gas prices are and why we care so much. So this is a chart. This white line is the 2022 gas prices. Now you can see it's generally hovering way above $100, sorry, 100 euros per megawatt hour, I should say, not $100, 100 euros per megawatt hour. We're above 150 at the moment. Now this is compared to, this is the range for the previous 5 years. You can see that the premium is just well above the extreme high of the last 5 years. Now, since June 2021, gas prices started getting crazy. We're more than a year into this process. And the blue line here is the 2021 price. And that's why when you look at the range of the last 5 years, last year ends out being the extreme. So until last year, we never saw prices like this. And now we are shattering those levels yet again. So it's just to emphasize that, you know, all the hype around the gas prices, if you're not in the gas market, you may not realize quite how extreme it is. This is just really extraordinary. We're still in the depths of this gas crisis in Europe. And that is why it is absolutely critical what is decided on the supply in the coming weeks and what it means for water levels in the Rhine and supply of other forms of supply for energy is absolutely going to be critical for what happens to the European economy in the second half of this year.
Okay, Mark, a stark reminder, as you say, of the prices, and of course, as we await that decision ultimately out of Moscow on Nord Stream 1, as the EU tells member states, according to the FT, to cut back on gas demand. Bloomberg MLive Managing Editor Mark Cudmore, thank you. Speaking of energy prices, that does bring us to the first of our top stories today. Gazprom has declared force majeure on several European natural gas buyers. It's a move that may signal it intends to keep supplies capped, reinforcing Russia's grip on the region's energy. For more on this, let's bring in Bloomberg's European energy team leader, Isis Almeida. What is happening then when it comes, Isis, to this decision by Gazprom to declare force majeure? What does it mean in reality for those European utility companies?
I think it was a real surprise that it took them so long to do that. They have been supplying less gas for a good part of the last month. And it surprised a lot of utilities to get also a force majeure that is retroactive, because clearly when they talk about it, you know, the letter that they've sent to customers really shows that it actually applies from supplies from mid-June. So it's quite unclear how you apply force majeure retroactively. But I think the markets are taking that as a signal that, you know, either Gazprom has no intention of turning back Nord Stream 1, or if it does, they will keep supplies capped at the about 40% capacity rate that, you know, it has done for the past month.
Okay, so still some uncertainty around this decision, indeed, as we look at that 40%, whether that gets further reduced at the end of this week. Thank you, Bloomberg's European energy team leader, who is across all of this for us, Isis Almeida. Let's get to what's happening on the political front then. The risk that is emanating continues in Italy as we look ahead to that important date, which is tomorrow for the Prime Minister. Italian Prime Minister Mario Draghi is under increasing pressure not to resign. His departure could again throw Italy into chaos as economic warning signs build up for that country and across the Eurozone, as we've been discussing. For more, we are joined by Bloomberg senior Italy editor Alessandro Speziale. Alessandro, Draghi speaking tomorrow then, what are we expecting to hear?
Well, it's what everyone is asking in Rome. The signs are building up that Draghi will eventually relent and walk back his decision to resign, but there is no certainty of this at all. Forces in parliament have been trying to convince him, to show him that there's going to be a stable majority that can get things done, which is what Draghi cares about most. A group of five-star lawmakers might walk out and in dissent from the leader, the one who has sparked this crisis, Giuseppe Conte, but we still don't know. Draghi is speaking tomorrow morning, and we will probably hear sometime later today whether there are news of what he's going to say.
Okay, Bloomberg's Alessandro Speziale, as we look ahead to that speech, that important decision by the Italian Prime Minister Mario Draghi, as of course economic concerns are in focus for that country as well. Let's get into the key market drivers with our guest, BlackRock senior investment strategist Laura Cooper joins me in the studio now. Laura, good morning.
Morning.
Thanks for coming in. We can get on to Italy and the political risk, maybe even the political risk here in the UK, but let's start with the recession fears that seem to move back into focus in the session yesterday, highlighted by that decision by Apple to reduce its headcount in the months ahead. Goldman Sachs also looking at culling some headcount as well. Where do we stand? What is your assessment of the recessionary risk, what type of recession we might be getting, and how you position around that?
Yeah, and that's the key question, is what type of recession are we going to get, and less about are we going to actually get a recession. Now, at this point, we assign a fairly low probability to a U.S. contraction over the next 12 months, and if anything, over the next 6 months, we're likely going to be in this period of so-called mushy growth. So really an environment where real GDP is in kind of that low single digits. And, you know, against this backdrop, we are likely going to see some inflation pressures start to ease that will reduce the impetus for the Fed to have to tighten as aggressively. Yes, they're going to continue to front load those rate hikes, but ultimately not enough to trigger that type of demand destruction that would prompt this sharp recession in the U.S.
Mushy growth, I haven't heard that one used before, so we'll coin that for you, Laura, and keep that going. If we get to a point, are you starting to think about the rate hike cycle as being pulled forward, aggressive, but short, and then you can start to think about opportunities maybe in the first half of 2023 on that easing emphasis from the Federal Reserve? Things start to open up, you start to position around that.
Yeah, and I think that is largely the case. Notably, if we look at markets are priced well for that front loading of Fed rate hikes, looking around that 200 basis points by the end of the year. We're slightly more dovish around the 175 basis point mark. But if we look, you know, investors are starting to position quite differently. They are starting to kind of price in that rising market narrative of the recession risk. But in our view, we still remain short duration. We still like the front end of the curve, largely on the back that the Fed eventually, in our view, is going going to have some kind of a dovish pivot. Timing that is really the key challenge. But when we look at what investors are doing, we're actually seeing outflows from short duration exposures. We're now seeing investors actually positioning further out the curve. So it's an interesting dynamic occurring when we look at investor sentiment.
Well, let me push you just a little bit on that timing then, because that is crucial, isn't it, in terms of the dovish pivot? Just give us a sense of where you think roughly, approximately, that starts to land.
And it's a great question. It's probably the key question that we've been faced by clients in recent conversations. And it's really all about a case of looking at those inflation measures. Are we going to see that sequential month-on-month print start to come down? We are seeing some signs that those key inflation drivers, like used auto prices, like the fuel prices, if we think about retail inventories are quite high, congestion at ports, inflation expectations have come down. There's a confluence of factors that do suggest we're likely at or near peak inflation in the U.S., which should provide some support to the easing from the Fed. I think it's really a case of, inflation is going to likely be sticky and elevated for quite some time, but as we start to see focus on those growth risks, we are in a cycle, we're in a stage where we are seeing deterioration in that economic data, and we'll be watching the unemployment rate quite closely, as we do think that will be the key catalyst for any kind of material pivot from the Fed.
I just want to pair that across to what you're thinking, and you mentioned this around fixed income and the opportunities in the short end, even as you see flows move to the back end of that yield curve. Where does that take you in terms of corporate credit then, and the opportunities there? Yeah, and that's a great question. I think actually one of our conviction calls that we recently just updated in our mid-year outlook was actually going upgrade in terms of investment grade credit. If we look at this current environment where annual coupon income is actually quite attractive given the higher yields on offer, and corporate fundamentals remain relatively healthy. And when we look at our recession scorecard, we're not yet seeing imminent signs of a U.S. downturn. But as we start to see that become more of the market narrative, we do think investors are going to tilt towards quality within the credit spectrum. So there are pockets of opportunity there, notably because valuations are quite attractive. Okay, tilting towards quality within credit. Laura Cooper stays with us. Very pleased to see. If we can bottle up Laura Cooper's energy and just disperse it around the newsroom, that would be fantastic. Laura Cooper, BlackRock Senior Investment Strategist, with more of her calls after the break. Temperatures, meanwhile, in the UK are forecast to hit record levels on Tuesday today. The heat wave has already caused transport disruption, with workers told to stay home and warnings issued by UK health officials. Let's bring in then Bloomberg's Will Mattis now. Will, if anyone was questioning the climate crisis before this week, then they would surely have had a rude awakening, given what we're seeing, the devastation across Europe. Just how bad is it going to get?
Well, today in the UK, we're forecast to have the hottest temperature ever recorded in the country. So it's as bad as anyone here has ever experienced. And, in the UK, we're really not used to these kinds of temperatures. There's very, very little air conditioning. The government estimates as little as, maximum 3% of homes have AC. Here in offices, we have it. And so people who can go to work in the office can keep cool during the hottest part of the day. But that's really hard because all the trains in London and other places are disrupted because the tracks are not safe for trains at temperatures this high. So it's really bad. And, the authorities are really cautioning people to take as many precautions as they can to stay cool and stay hydrated to try and stay safe during this heat wave. And, it's just going to keep getting worse. This kind of heat, while it's unprecedented, will soon become more normal. The record we're about to break today was only set in 2019. So this kind of hot heat in the summertime is going to be here to stay.
Okay, it's remarkable to think that this becomes the new normal, 40 degrees here in the UK. And that bit of colour from some of the Bloomberg reporting, livestock is not allowed to be transported at 37 degrees or above, but that is the temperature you're getting in London's undergrounds and subways at this point. Okay, Bloomberg's Will Mattis, thank you for the latest on the heat wave here in the UK, and of course, the climate crisis as well that continues to ravage the Eurozone. Coming up, central banks in focus. The ECB is set to deliver its first interest rate hike since 2011. That's going to be on Thursday. We discuss next. This is Bloomberg.
companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
In 2020, rising bond yields didn't seem to bother the new ECB president.
We are not here to close spreads. This is not the function or the mission of the ECB.
But times have changed.
We will not tolerate fragmentation that would impair monetary policy transmission.
So what exactly is fragmentation? To Christine Lagarde and the European Central Bank, it means bond yields for some Euro region nations, such as Italy, blowing up. It needs to be avoided. Remember the debt crisis, when soaring yields for some peripheral nations almost destroyed the euro? Back then, Italian yields topped 7%. It took former ECB President Mario Draghi's famous vow to quell the turmoil.
Whatever it takes.
Today, interest rates are set to rise for the first time since 2011 to curb record inflation. Italian yields have been climbing too, recently passing 4%. In response, the ECB is building a gadget to keep the bonds in line. How exactly it will work remains a secret, though fragments have come out, such as ensuring it won't negate the effects of tightening, a process called sterilization.
Sterilization could be an element of that. My personal view is that it should be part of the instrument, but of course it will need to be discussed.
Will the ECB's new crisis tool work? Not everyone is so sure. The instrument may be ready by the central bank's next meeting on July 21st. Until then, we'll have to see what markets yield for Eurozone bonds. Okay, let's stay on the central bank story then and bring back Laura Cooper, BlackRock Senior Investment Strategist. Laura, of course, we are expecting that 25 basis points from Madame Lagarde and the ECB on Thursday. You talk about the brutal trade-offs for this central bank. Just how far and how fast can they go, given concerns about gas, given concerns about political fragility, as we look at that stable, or at least that pillar of stability, Mario Draghi potentially having to step down, possibly as early as tomorrow?
And that's a great question. I mean, it's really this conflict facing the ECB about how do they contain these inflationary pressures at the same time as we are seeing this deteriorating growth backdrop. Now, going forward, I think they are going to have to get out of negative policy rates. They've made that quite clear. So focus will tilt towards that anti-fragmentation tool and the effectiveness of that. So Thursday, we're actually looking for, the size of that program, the conditionality around it, the purpose of it. And of course, we're going to get a new acronym as well. But it's really, how is that going to actually actually potentially contain spreads. Because if we look, a lot of that narrowing in BTP Bund spreads since mid-June was on the back of this, planned tool coming into force.
So there's scope for disappointment on that front?
I think there is quite a bit of scope for disappointment, notably because there's going to be ambiguous by construction. This is meant to be a tool that is going to be reactive, more so than actually proactive in terms of signaling what they're actually going to do. And it's a key question. There are a number of constraints around this. You alluded to the political backdrop. There are operational, there are legal constraints around this. So it will be quite interesting to see how they manage this tricky balancing act of raising rates in this inflationary environment without actually triggering a material downturn at the same time as we are facing this energy crisis across the continent.
So I want to go from the macro to the micro then, of the earnings picture. Just give us your assessment of what we've seen so far and where you're finding pricing power.
Yes, yeah, so it's too soon in the earnings season really for us to make judgment calls in terms of how it's going so far. But I think ultimately what we are seeing is that earnings estimates remain too optimistic in our view. Really what we're likely going to see is more margin pressure going forward. And we're really looking for corporates' guidance in terms of the demand outlook, and as well as how are they able to actually pass these powers onto the consumer. So in that lens, we are tilting more towards those defensive sectors. Notably, we do like healthcare. Tech is a little bit more of a challenging tactical type of play, but certainly when we look about healthcare, it does have valuations that are below those market multiples. We are seeing kind of the pent-up demand from COVID. And then unlike other defensives like consumer staples or utilities, we are seeing the tailwinds from more of those structural forces like demographics and aging population. So we are tilting more towards the selectivity within sectors.
What do you do with commodities at this point?
It's a great question, because actually if we look at the flow picture, we are seeing that beginning in May, we actually saw investors capitulate from this sector. That gained traction in June. Months to date in July, we are seeing that actually accelerate, largely on the back of markets pricing in this U.S. recession fears, which, as I mentioned earlier, is largely kind of out of scope of our current base case. Now, I do think there is still a case for upward commodity pressures, notably on a diversified basis. You'd want to have exposure to precious metals in that tail risk scenario of more material risk emerging, but as well you want to have those soft commodity exposures, and as well energy. If we think about this current backdrop where the disruptions of the Russian-Ukraine invasion are likely going to remain for some time, and as well crop disruptions in terms of the food price. There's a number of different ways that commodities have upside from here.
So those flows out of commodities may be a little premature. You're currently seeing Brent at 106, gold 1,708, not a lot of movement there. That is the call as we look ahead to potentially mushy growth then out of the US. A recession is not the base case for Laura Cooper. Thank you, as ever, for coming into the studio. Your analysis, Laura Cooper, BlackRock Senior Investment Strategist. Coming up later in the show, Apple has said it will slow its hiring and spending growth next year in order to cope with a potential economic downturn. More on that in just a bit. This is Bloomberg.
PSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit pso.org/now, where the music plays on. PSO season sponsor, Bank of America.
Welcome back to the Open. We are 23 minutes into the European trading day, and your markets are lower here in Europe after gains of almost 1% yesterday across European equities. You're seeing losses now of 0.3% across the benchmark. The DAX is down 73 points, the CAC 40 lower by 36 points, and the FTSE 100 trading below 7,200, off by 0.5%. Let's switch it over and see how things are playing out around some of the individual stock stories for us today. Of course, we are in at least the edges of earnings season. Some of those have come through. Also details from the French government around EDF. Just finalising the details, they say this deal to buy the remaining stake and fully nationalise this energy company is going to close mid-October. You're seeing a lot of upside then. The reaction from investors up 15% on EDF's plans, 9.7 billion euros, around 12 euros per share is the offer from the French government. Investors are cheering that. Volvo, this is the trucks business, down 0.7% despite a beat in terms of second quarter earnings. They're seeing pretty solid demand in terms of momentum, and they're able to price on some of the input costs that they are struggling with. ASAS gaining, look at that, 11%, more than 11% after resolving a dispute with their pilots union. It means they can focus on financing plans. They did file for bankruptcy protection in the US earlier this month. Now, let's get to the Bloomberg Business Flash with Alice Atkins. Alice.
Morning, Tom. Apple is said to be planning to slow hiring and spending growth next year in some divisions as the company copes with a potential economic downturn. Sources have told Bloomberg that the decision stems from economic uncertainty, although it isn't a company-wide policy. Apple is still planning an aggressive product launch schedule in 2023 that includes a mixed reality headset. Mining giant BHP has joined Rio Tinto in signalling more turbulence to come for commodities producers. BHP, the world's biggest mining company, warned of slowing global growth due to the war in Ukraine, Europe's energy crisis, and tightening monetary conditions. It also said cost pressures would linger over the coming 12 months. Rio Tinto made similarly dire remarks last week. Goldman Sachs is planning to slow hiring and reinstate annual performance reviews that were suspended during the pandemic. CFO Dennis Coleman said on a conference call with analysts that the bank is taking action to cut spending and improve efficiency. Goldman and other big Wall Street lenders, including Morgan Stanley, JP Morgan and Citigroup, reported substantially larger workforces in the second quarter compared with a year earlier. That's your Bloomberg Business Flash. Tom?
Alice Atkins here in London, thank you. Coming up, more on big tech. We will dig into news from Apple and SoftBank next. Question marks over ARM's IPO here in the UK. The market's currently lower by 0.3%, but the futures in the US pointing to gains of between 0.3% and 0.4%. Plenty more coming up. This is Bloomberg.
know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Welcome back to the Open, 30 minutes into the European trading day. Happy Tuesday. Here are your top stories. Gazprom declares force majeure on some European gas buyers, reinforcing Russia's grip on EU energy supplies. Hiring freeze. Apple joins its fellow tech giants in scaling back headcount plans. Goldman Sachs will bring back its annual employee cull. Plus, a brutal heat wave. London may hit a record 40 degrees as extreme temperatures ravage Europe. Let's check in on these markets then. A sweltering day here in the city of London. The European Stock 600 currently down 0.4% after the gains of almost 1% yesterday in European equities. But it was stateside where you saw the losses, particularly after that announcement from Apple that they were going to be reducing their headcount, or at least their headcount growth. And that sent the S&P down almost 1%. The Stoxx Europe 600 currently down 0.4%. The DAX is lower by 0.6%. And the hiring and the jobs numbers look pretty positive here in the UK. The FTSE 100, though, down 0.5%. Basic resources with iron ore and copper is a drag, but you saw jobs numbers coming in at about 300,000, well above the estimates, so pointing to strength in the labour market, even as there are concerns about the cost of living crisis here in the UK. Let's switch on, see how things are playing across the sectors. A bit of a defensive tilt. You're seeing that in the bond markets as well. Yields are down across fixed income, and in your sectors, you're starting to see healthcare, banks is also up there, utilities as well. Just the 3 sectors that are in the green at this point. The heaviest selling coming through in travel and leisure, down 1.5%. Tech is off by 1.4%. Financial services also lower. But again, the broad picture is losses of 0.5% across your main indexes. The heaviest selling over in France. The CAC 40 lower by 0.8%, despite the optimism around the government's plans for EDF there. Future stateside, the S&P E-mini is pointing to gains of 0.2%. Let's get back to the tech story then. I mentioned that tech was one of the biggest laggards across these sectors. As we head into earnings season, Apple has said it will slow its hiring and spending growth next year in order to cope with a potential economic downturn. Meanwhile, Netflix is due to report results today. Investors will be keen to see if the streaming giant has a solution to subscriber losses that could total 2 million in the just ended second quarter. Joining now is Bloomberg Quick Takes Alex Webb, who's always across the tech story for us with a finger on the pulse firmly. Alex, when it comes to Apple, this decision to reduce its hiring, how significant is this? What does it tell us about the constraints around a company that's still very cash rich?
Well, the thing we've seen previously with the companies that have announced cuts, not certainly hiring freezes, it's the likes of Google, Meta, and fundamentally ad tech companies. And of course, the first thing that gets hit when there's any sort of economic slowdown and marketing budgets. So it therefore follows that, of course, these guys should suffer. Now, Apple clearly is a bit different, but it is someone that's affected by inflation. And if you're in the business of selling $1,000 pieces of hardware every sort of 2 years to a consumer, i.e. that's the pace at which someone might refresh, that pace of refresh is going to slow down if people don't have as much discretionary spending. So Apple, maybe that's why the market perhaps panics a little bit. Stock declined 2% yesterday on the news because they're reading across that there's a little bit of hesitation about whether Apple's going to be able to sell as many devices.
It's that inflationary caution for Apple rather than when, as you said, it's a slightly different picture when it comes to the ad tech companies. When it comes to Netflix then, they've been concerned about this company. Of course, they did very well during the pandemic, and then they've struggled in terms of kind of continuing that subscriber growth. What level of optimism is there, if there is any, from investors around this company?
Not much, frankly. The expectation is they're going to report something like 2 million fewer users than in the previous calendar quarter, not the year ago, but consecutive quarters. Most of that, more than half of that, coming out of the US. The only place there's going to be growth is in Asia. We've, of course, seen fairly obvious big hits such as Squid Game, but they are really expanding their Asian production. They are trying two things, essentially, to counter this trend. Firstly, they think there are 100 million households which could be customers, but they are using passwords from existing Netflix subscribers. So they see an ability, if you crack down on that password sharing, that have different IP addresses, they're in different locations, then maybe that's an upside of 100 million households. Quite an optimistic number, that seems. The second thing they're doing is they're staggering their releases a little bit more. Rather than dumping a whole show in one go, that means that somebody, if you're a Stranger Things fan, you might just watch the whole series and then you churn out, i.e. you cancel your subscription. What they've done with Stranger Things is they've broken it into two parts. They're doing similar things with Better Call Saul, the Breaking Bad prequel. That helps extend the lifespan of someone's subscription because they don't churn out as soon as they've seen the show.
Is that they want to create that stickiness?
Exactly.
Do they risk a backlash around the password sharing? Because this was something that they were very relaxed about, and now there's been a pivot.
Yes, I mean, ultimately, look, if the shows are good enough, people are going to do it, right? And if there are people in secondary households, do we think that there are 100 million households going to subscribe who don't currently subscribe? Almost certainly not. But even if you get 5–10% of those, that is perhaps a relatively meaningful number when you think about the fact that their subscriber numbers are dropping at the moment. I guess the key thing is that there had been an expectation throughout much of the past 5–8 years that Netflix was becoming much like utility, i.e. it's the base layer, everybody gets it, and then everything else is discretionary viewing on top of that. Actually, as we enter a sort of inflationary and recessionary environment, it becomes clear that this is discretionary spending for a lot of people, and that's why they're cancelling their subs.
Yes, like I guess cord cutting, and when you look at if you have Disney Plus or Paramount, Netflix, and you start to look at how you cut back on costs. Alex, as ever, fantastic. Thank you very much indeed. Alex Webb, of course, of Bloomberg Quick Take on Netflix, and also the hiring freeze, or at least the stalling, the reduction of the hiring growth at Apple. Let's get to another tech story then. And SoftBank is said to have temporarily paused talks on listing shares of its chips division, Arm, in London. It's blamed political turmoil here in the UK and the government here. For more on this, we are joined by Bloomberg's Kat Van Hoof. Kat, what does Arm's potential change of heart then about a London listing next year mean for the UK market? What does it signal?
So Arm would have been a really, really important win for the UK, particularly since this year listings have fallen to the lowest since the financial crisis in 2009. So Arm was one of the flagship biggest listed tech companies in London until it was taken private by SoftBank in 2016. So, losing potentially the listing early next year, having SoftBank refocus towards New York would be quite a big blow. We've seen a few other companies. World Remit, called Zeps now, is looking at London instead. It's creating a bit of a bad news cycle for London, which is already not doing very well in the IPO scene.
A bad news cycle for London, as you say, already pretty lackluster when it comes to IPOs. Boris Johnson's government had been pretty determined to kind of drive through a program to boost those listings and make London more attractive. What is likely to happen to this push now? Do they double down or do they start to capitulate?
So I think the idea would be, this is a long-term post-Brexit, trying to make sure that London doesn't lose its standing as a financial centre. So I do think this is going to be something they want to continue. But obviously the political turmoil is putting big question marks over the timing. Obviously, if Rishi Sunak becomes Prime Minister, there will be a bit of continuity because as the Chancellor, he had been driving this push and some of the changes to the listing rules. I believe there's a big sort of Mansion House speech tonight where hopefully there'll be some clarity, but it's certainly kind of is another weight on the London listing scene at the moment. It's not, a good look to be having political turmoil and uncertainty about what's going to happen, which changes will go through, when, and who's going to be making the decisions, essentially.
Yeah, and ARM's such a tech success story for the UK, but not being able to have it listed here, certainly a blow in terms of IPOs and building out that system here, that structure here in the UK. Kat Van Hoof, thank you for the latest on that, ARM and SoftBank, of course. Coming up, US banks are still adding staff to their ranks, but is the hiring boom over? We will talk US bank earnings next. This is Bloomberg.
city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back to the Open. We are 41 minutes into the European trading day. We have a line crossing the terminal. This is from Reuters. ECB policymakers to discuss 50 basis points at the rate hike this week. As a rate hike this week, of course, the meeting and the decision expected on Thursday. And the ECB have been very clear about flagging 25 basis points. Now this line from Reuters, policymakers will discuss 50 basis points. We'll keep across this story for you, but you've seen a pop in euro dollar, up 0.7%, currently trading at 102. Yields also high at the front end. German Bunds, the 2 years, and the Italian 2 years as well. German Bund 2 years up 5 basis points on the yield there. Italian 2 years up 4 basis points. Okay, traders at Goldman Sachs have rescued the group's earnings from an investment bank slump with a 32% surge in second quarter trading revenue. And across Wall Street, despite the tightest labor market in half a century, banks, led by Goldman Sachs, were still adding staff. But is the hiring boom now over? Joining me is Bloomberg's finance team leader, Tom Metcalf. Tom, what were the key standouts for you then, the key takeaways from the earnings across these banks?
Well, the first of all was just how well Goldman's traders did, and thought it was interesting you brought up the ECB just before we came into this, because one of the big areas for them was their rates business. So fixed income, but particularly rates, really soaring, and that's kind of what saved their results in some ways. And then you looked at yesterday's results at Bank of America too, different story. Really there, the interesting thing for me was the net interest income on the rise, as you'd expect, again, because of rates. So there's kind of two different things happening in banking. Trading's doing very well, and also the traditional, perhaps sort of more, old school form of lending, etc., is starting to make a comeback.
Yeah, that charge around trading really making up for the investment banking losses that we've seen, that activity falling off there. When it comes to hiring then, it doesn't seem that long ago that you and I were discussing the efforts that these banks were having to go to attract and retain talent. Now they're talking about reducing headcount, or at least not hiring as quickly.
Yeah, the mood has definitely shifted. And while some banks are still adding staff, Goldman, they'll need more traders, so they're adding more and more people. They are starting to say, hey, we are going to cool those plans, and also they're bringing back sort of performance reviews, which sort of is typically a way they sort of cull their lowest performing staff.
Okay, Tom Metcalf from our finance team on these earnings. Thank you. Joining us now for more on this and more analysis is Filippo Maria Aloati, Head of Financials at Federated Is. Filippo, thank you for joining us. What is your take on where these banks stand and whether or not you think that strength in trading is going to be sustained in the quarters ahead?
Yeah, that's good morning, Tom. That's a very good question because, of course, markets were very volatile, especially the macro business, or essentially rates, FX, and commodities. And I think at least in the short term, this volatility is here to stay. And we think just the news on the ECB potentially considering a 50 basis point, it's very conducive to this view. And I think as long as the Fed doesn't really finish the job in terms of bringing the rates to the sort of final rates for this year, then I think we got to give that we're going to live with volatility. So I think it speaks for higher trading, and this will come to essentially at the cost of the investment bank division, because we're already seeing lower primary market activity. I think especially on the equity side is the lowest since the global financial crisis, and it's tough to see this changing, at least in the short term.
Okay, so it's tough to see, because that would have been my next question, tough to see that the investment banking part of the business then coming back, at least in the short term. When it comes to that benefit then, we're talking about the ECB potentially considering 50 basis points this week. In terms of net interest margins for these banks, to what extent are they benefiting from this and making the most of these higher rates?
Yeah, well, that's an interesting one, because in theory, especially in Europe, we've been waiting for higher interest rates for as long as I can remember, since the 2015, the QE experiment started. And of course, now that we get in finally this interest rate increase, then of course, now the talk is recession is around the corner, what's going to happen, and so the cost of risk for all the banks, and so Americans, European, and potential Asian as well, and so will increase. So I guess here becomes a bit of a balancing act for the management of the banks to have the revenue, the increase in revenue, especially because of higher rates, offsetting the likely increase of cost of credit, and also the inflationary expense, because this to me seems to be not really well captured by the consensus estimate. If you look at some of those franchise, the JP Morgan, the Citi, they kind of in the 3 to 4% total cost increase, whereas the economy we know is running at 8-9% CPI. So to me, there is a little bit of a gap, and it's possible that actually we do have some disappointment on the cost side in the second way. So this goes also into the direction of the likes of Goldman maybe rethinking in terms of the hiring priority and perhaps cooling down some of the investment they were penciling in for the second half.
Okay, I just want to get more on that then. So you think in terms of cost cutting, is that where the fat lies? Is that where the fat is going to be cut? Is it about head count? And is it also about reducing that investment in technology, for example? Where can they train their sites in terms of trimming some of these costs, I should say?
Yes, because also if you think a lot of those banks, they are invested heavily on tech, on IT, and some of those is outsourced. And the cloud, the IT service provider, they typically have these 1-year renewals. And this 1 year renewal also is a clause for inflation. Of course, I mean, it wasn't so much of an issue over the last few years when we had very little, let alone almost inexistent inflation also, where inflation it actually seems to be at least to some part embedded in the system, and we're well north of 6-7% inflation. And of course, I mean, if you think then, especially for 23, then you put a 7% or 8% increase on top of your renewal, then it becomes quite an headwinds for the banks.
Filippo, as we consider the potential implications of a recession, whether in the US or here in Europe, what is your level of confidence, given your deep expertise when it comes to credit, in the credit quality of these banks?
Yeah, that's if you put things into perspective, I think so far in America, so we're running so this net charge-offs essentially is a measure of credit loss, especially on the consumer side, around say 20-22 basis points versus an average, long-term average of 55 basis points. And some of the banks are still pretty sanguine. JP Morgan was saying we count to finish the year as around inside 20 basis points for consumer net charge-off. So if that's the case, then I think also it's a relatively benign scenario. But I think I would be looking, especially for the franchise, they are more on the consumer side, and especially those franchises that are between prime and near prime. For example, today Ally Financial is reporting is a very large nationwide auto loans franchise in America. It's very well run and regulated by the Fed banks. But I think also will be interesting to hear what they say in terms of losses from here into the next year, because it is possible that we'll have a recession, but it will be next year. So it's about increasing reserves.
Okay, maybe increasing reserves to offset those recessionary risks and the pressure on credit. Filippo Maria Aluati, head of financials at Federated Hermes, again on the back and the view that trading and that volatility will continue to be a benefit for these banks, even as investment banking lags. Coming up, EDF shares surge after the French government offers to pay about 9.7 billion euros to fully nationalize the utility. We'll get the details on that next. This is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question. That's going to be the best question I get all night.
I'm glad you asked that. Bloomberg Television. Top experts. Great questions.
This is a market that
over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the Open. We are 52 minutes into the European trading day, and we're checking out, of course, where things stand across these markets. 52 minutes into the trading session, you're seeing losses of 0.5%. There's a redhead crossing the terminal right now. The ECB, officials at the ECB are considering 50 basis points as the hike on Thursday. Of course, they had flagged 25 basis points. They are contending with very, very high inflation, decades high inflation, of course, and the potential that Russia will not restart those gas flows around Nord Stream 1 later this week. In fact, Thursday is the day when you're meant to get clarity on Nord Stream 1. Of course, we also know that Gazprom has declared force majeure for a number of European utility companies. Concerns then around inflation, the ECB response, officials now looking at 50 basis points. And you're seeing that move in the single currency up 0.8% on the back of that news, currently at 1.02. Of course, on Thursday, we're also expecting details around the anti-fragmentation tool and what the ECB can bring to bear on that front as political risk continues to bubble in Italy. And Wednesday, a crucial day for that nation. So moves higher in the single currency on that news that ECB officials are considering 50 basis points, or at least discussing 50 basis points for Thursday. EDF, this is one of the big corporate stories in terms of the movers. Details coming through from the French government around the bailout for this company. You're seeing gains of more than 15% for this French utility. The French government buying the remaining 16%. They already have more than 8%, okay, 84%, of course, 16% to close out that full ownership, 9.7 billion euros. They're offering around 12 euros a share for investors, and investors are cheering that news. So the details coming through in terms of the nationalisation of that utility company, that, of course, is linked to the gas story and the energy price crunch across Europe. We know, of course, that over in Germany, Uniper is also looking at a bailout from the German government. This is the details around EDF and investors cheering the latest in terms of the granularity of that detail from the French government. Right, let's get the Bloomberg First Word News now with Alice Atkins. Alice.
Hi, Tom. Bloomberg's learned that Russia's Gazprom has declared force majeure on at least 3 European gas buyers. That means it could not fulfill its supply obligations due to unforeseen circumstances. Gazprom had already been curbing supplies to Europe and has closed its main pipeline for maintenance. The European Commission is said to warn that a cut-off of Russian gas shipments could reduce GDP by up to 1.5% if the next winter is severe. In Ukraine, the country's military chief says the situation in the country has been completely stabilized. Valery Zaluzny posted on Facebook after speaking with the chairman of the U.S. Joint Chiefs of Staff, Mac Milley. He said an important factor was the arrival of a new U.S. long-range artillery system. Europe's heatwave is bringing water levels in one of the region's most commercially important rivers to dangerously low levels. The Rhine is about 37 centimetres above a mark that would effectively choke off a key bottleneck in western Germany. A drop below that level would mean barges could no longer usefully navigate the river. Bloomberg's been told China may allow homeowners to temporarily halt mortgage payments on stalled property projects without incurring penalties. The proposal still requires approval from senior Chinese leaders. It's part of a broader push to stabilize and inject confidence into the housing market while buying time for developers to complete projects. And the field of potential candidates to replace outgoing British Prime Minister Boris Johnson is narrowing. Rishi Sunak and Penny Mordaunt retained the top 2 places in the latest Conservative Party voting. More ballots are scheduled for Tuesday and Wednesday, after which just 2 contenders will remain. Johnson returned to Parliament Monday for one of the last times as Prime Minister for a largely symbolic confidence vote. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom?
Alice Atkins here in London, thank you very much indeed. The news of the moment, the redhead across the terminal then, that the ECB is looking, quote, more closely at a half-point rate hike this week. Money markets now betting on over 100 basis points of ECB rate hikes by September. That is up from 75 basis points. The ECB looking then to front load for the first time in over a decade. That is it for the European Market Open. Surveillance Early Edition is up next. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I see only people which are really convinced that this is the challenge that we must overcome, but it's all about speed. We need more speed. And this weather, as you rightly said, is a stark reminder that global warming is already happening now.
There's no question that the market environment has gotten more complicated, and a combination of macroeconomic conditions and geopolitics is having a material impact on asset prices, market activity, and confidence.
The recession is our base case. It's a mild recession, even with the Russian gas start flowing again.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Tom McKenzie in London. Here's what's coming up on today's programme. Gazprom declares force majeure on some European gas buyers, reinforcing Russia's grip on EU energy supplies. Hiring freeze, Apple joins its fellow tech giants in scaling back headcount plans. Goldman Sachs will bring back its annual employee cull. Plus, a brutal heat wave. London may hit a record 40 degrees as extreme temperatures ravage Europe. The other big headline, of course, is that the ECB and officials there at the Central Bank of Europe are now considering 50 basis points on Thursday. The markets now, money markets pricing in more than 100 basis points by September from the European Central Bank. That's pushed the euro higher. It has pushed yields higher as well at the front end, particularly German debt and Italian debt. Currently, in terms of your futures stateside, after the losses we saw yesterday of around 0.8%, gaining 0.2%. The US 2-year at 3.15. That's a 2 basis point move. Euro, again, bid almost 1% on the back of that news. Again, that 50 basis points is now in play for the ECB this week after Madame Lagarde had flagged very clearly 25 basis points. So a change there and whether or not the ECB is looking at front loading. This is euro dollar on the back of that line then. Of course, we'll keep across anything else we get on the ECB's thinking as we lead up to that Thursday meeting. The reaction across the bond yields, the reaction across euro dollar, and the fact that money markets, as I said, now pricing in more than 100 basis points by September as the ECB wrestles with these inflationary impacts. Here in the UK, you're seeing losses of 0.4%. The hiring picture, though, pretty good. 300,000 new jobs. The estimates had been for about 170,000. The CAC current lower by 0.8%. There's one idiosyncratic corporate story in the mix there, which is EDF. We'll get more details on that as well. And the DAX currently down 0.8%. Italy also under pressure, 0.5% as we look ahead to Wednesday and the decision by Mario Draghi as to whether or not he does indeed step down. The political pressure there as that coalition crumbles. And of course, that is playing into the mix for the ECB as well. We're waiting for those details on the fragmentation tool come Thursday, as well as that rate hike. Now, Wall Street banks have posted upbeat results. This as speculation intensifies that the Fed will take A more measured approach to policy tightening, easing fears of recession. Speaking on Bloomberg TV, US bank CEOs weighed in on the debate.
U.S. consumers remain quite resilient. Consumers and businesses have been resilient so far.
Consumer spending remains well above pre-COVID levels.
I expect there's going to be more volatility and there's going to be more uncertainty.
The environment very complicated, lots of uncertainty.
We see inflation deeply entrenched in the economy.
We might head into some form of recession.
Little of the data I see tells me the U.S. is on the cusp of a recession.
It's unlikely to be a deep and dramatic recession, at least in the U.S.
We've managed through recessions before. We'll manage it again. I'm quite comfortable, do it quite well.
Okay, for more, we are joined by Bloomberg's finance team leader, Tom Metcalf, who's been passing these results for us. What really stood out to you then, Tom?
Well, it's interesting to hear that variety of thoughts from all the CEOs and, kind of a spectrum of thoughts that the recession is coming, but how bad or good it will be for the banks. For me, the two things that stood out yesterday, where we had the last two banks report, Goldman and Bank of America, were A, net interest income. So these rising rates are helping the bank's sort of core business of lending sort of bounce back a bit, and that sort of surpassed analyst expectations of Bank of America. And on Goldman, just the classic sign of traders just continuing to outperform, rescuing those investment banks from very disappointing investment banking performance.
Yeah, the traders absolutely smashing it at Goldman Sachs and elsewhere as well. Yeah. When it comes to the jobs question then, and that stood out as well for many of us in terms of the prospects of lower job growth across some of these banks, and maybe some divisions being culled as headcount is added elsewhere. What are we expecting to see? What was the significance of what we've heard around jobs?
Yeah, I think the mood music has changed. We've gone from sort of hiring frenzy. We heard the phrases like talent war. Now it's very much like, we've maybe looking to cut back or at least sort of looking to slow the pace of hiring. That's what Goldman said. And it's really interesting because some of these banks have really expanded in recent years. Goldman, I think, has added sort of 15,000 jobs, so a really huge pace of growth. And, they're now looking at perhaps pulling that back a bit, which reflects, I guess, the uncertain times coming into.
Is there any sense, we were talking to Federated Hermes about this just about 30 minutes ago, as to whether or not the trading, what we're seeing in terms of trading and investment bank, that's going to change in any significant way in the months ahead, or is that divergence likely to sustain itself?
Yeah, I think probably divergence is likely to sustain itself. I think it's pretty clear market volatility is here to stay, and that's where traders tend to thrive, or at least sort of certainly need lots of traders there to kind of adjust to those movements. So I think you'll probably see investment banking continue to struggle. So IPOs are down, all that sort of equity raising doesn't seem to be bouncing back. But on the trading side, with rates rising, it's a good time to be a trader.
Yeah, and a reminder, of course, that the ECB is now considering 50 basis points, just to tie into that comment on terms of net interest margins. Thank you, as ever, our finance team leader, Tom Metcalf, breaking down those earnings and what really stood out. In terms of euro-dollar then, just to highlight for you the strength, of course, for the single currency coming through in the session today, up 1%, currently trading at 1.02. The Bloomberg dollar index down 0.6%. Just a reminder, this on the back of the news that the ECB is looking more closely at 50 basis points this week. Of course, Madame Lagarde had flagged very clearly that 25 basis points was almost certainly baked in for Thursday. Now officials looking at 50 basis points, again, as they weigh up this inflationary environment. We'll check in on yields as well. There's been a significant move higher across the German bonds, particularly at the front end. So a 10 basis point move higher in yields at the front end of the German 2-year, currently positive by 62 basis points. The Italian 2-year as well, up in terms of yields by close to 10 basis points, currently at 166. We will keep across all of these asset classes for you as we digest that news then around the shift in emphasis and possibly front-loading from the European Central Bank. Coming up, Italian political turmoil. Some five-star rebels are working to save Mario Draghi's coalition. Italian bonds, well, they're currently under pressure on the back of that ECB line. We continue to stay focused on those. Of course, the details around the anti-fragmentation tool from the ECB will be important as well on Thursday. But we're going to get a test and a taste and the latest when it comes to political turmoil in Rome next. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Welcome back. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London. Now to the politics of Italy. Italian Prime Minister Mario Draghi is under increasing pressure not to resign. His departure could throw Italy into chaos as economic warning signs build up. For more, we are joined by Bloomberg's senior Italy editor, Alessandro Speciale. Alessandro, Draghi speaking tomorrow then, a crucial moment for the Prime Minister of Italy. What are we expecting?
Nobody in Rome really knows, which is a bit of a paradoxical situation if you think about that. Usually it's governments, it's heads of government who want to know if they still have the confidence of their own parliament. This time it's almost as it's the other way around. It's parliament which is waiting to know if it has the confidence of the prime minister. Is he ready to stay on the job? Is he convinced they can still carry on with reforms, get something done in the more or less 6 months that remain before the next elections? Or is he just going to confirm the resignation? We're going to find out tomorrow morning when he speaks in Parliament.
And Alessandro, as we weigh up the prospects of 50 basis point hike from the ECB and the strain then on Italian debt, what is at stake for Italy as we also consider the fate of Mario Draghi?
Well, I mean, lawmakers negotiating here in Rome and trying to find a solution, trying to find a compromise that will allow Draghi to stay on the job, hardly need a reminder of just how dramatic the situation is, just how big are the challenges for this government. The ECB raising interest rates, the war in Ukraine, the energy crunch, the need to carry through reforms that could put in danger 200 billion euros of EU funds for renewing the Italian economy. There is really a lot to do, so this is really not really a good time to have a government crisis in the country.
Okay, Bloomberg's Alessandro Speciale on what to expect then from Italy and the Prime Minister tomorrow. Mario Draghi, of course, finally making that decision. That is expected, at least. We are now joined by William de Wilde, Chief Economist at BNP Paribas. William, good morning. Thank you for joining us. Just for your reaction then to the breaking news just in the last few minutes, that officials at the ECB are now seriously considering 50 basis points as the rate hike on Thursday. Of course, following the expectations from many, and of course the commentary and the communication that 25 basis points was what was going to come through on Thursday. Now they are seriously considering 50 basis points. Your reaction?
Well, you could say it's another surprise. We have been surprised on a number of occasions throughout this year. It's another one, but it also shows that really means serious business. And of course, Europe is suffering. European euro area is faced with a major inflation issue, and front-loading, like the Fed has done, I think is now being accepted as the road to follow amongst the governing council.
front-loading is now being considered as the road to follow. Certainly, we heard that from Canada, the rationale for that, from the Canadian Central Bank, as you say, the Federal Reserve as well. What does that mean then in terms of the trajectory? Do we get another 50 basis points in September? The money markets are now pricing in 100 basis points, more than 100 basis points by September. And if we do, does it give the ECB the space to go softer towards the end of this year?
In a way, it's kind of reverse optionality. Remember several months ago that the Governing Council was talking about we need to keep the optionality and refrain from tightening if we think it's necessary. Now it's like the other way around. By doing a lot in the near term, you can always do less subsequently. I think, well, we were penciling in a couple of weeks ago that we would have 25 now, followed by 2 50 basis point hikes in the two meetings in the fall of this year. Clearly, once you move 50, what the market is expecting is that you actually continue along that pace, based on the view that better do more and really send a very strong signal. What you need to do is you need to cool down the demand, and also you need to weigh on expectations, because the concern is that, of course, these expectations think of wage negotiations, but also pricing strategy of companies, that they would really factor in that inflation would stay high for longer, and that's why they need to step their foot on the brakes.
William, how materially does this change your view on recession risks then for the Eurozone?
Well, European growth was already very soft, so you do not need a lot to tip it into a slightly negative territory. That is what we call a technical recession. To have a full-fledged recession that would be deeper in for 2 successive quarters or even more than that, for the time being, that still seems very unlikely. We have a number of support factors. One is purely statistical, of course, that is the carryover effect from the strong increase in activity last year. But also remember that the labor market continues to be very strong, I would say amazingly strong if you look at the hiring intentions of companies. That's an important element as well. You also have the fiscal support from Next Generation EU. European Commission counts it at like 50 basis points. And then real rates are still very low, as we know. So you have a number of support factors. So I think the real issue about a full-fledged recession is what happens to gas supply. That's the real issue.
Yeah, and still there's a lot of uncertainty around that precise question. Of course, the gas supply really ties into the single currency. And the euro-dollar currently in the session up, of course, on the back of this news, that 50 basis points is being considered. Do we change our view on euro-dollar on the back of this news?
Well, the thing is that we had a very strong underlying dynamic towards appreciation of the dollar versus the euro. Clearly, I compare it with a rubber band. So when you pull a rubber band, there's a lot of energy in there, and then you have a new element, a new piece of news, and it's like unleashing the rubber band of letting it go. Now, okay, you can surprise by hiking 50 basis points, and then what happens thereafter? And I think we're still in the environment that you have a very aggressive Fed out there. And the other important element that has been weighing on the euro, which is the risk of a gas supply disruption of a major extent, that is still there. So to now say, well, we have a turnaround, looks a bit early.
So premature to call a turnaround for the single currency. When it comes to what the markets need to see...
The other element is that you...
Yeah. No, please go ahead, William.
The other element you need is that you would also need to see signs that the Fed has done the bulk of the job. If you have the combination that no gas supply disruption of a major nature and the Fed is getting kind of closer to the peak, that really will change the game for euro-dollar.
Okay, so continuing, of course, to watch the Fed and how that plays across for that currency across euro-dollar, currently high on the back of the news that 50 basis points has been considered. William de Wilde, thank you for your analysis this morning, Chief Economist at BNP Paribas. Okay, let's get to the Bloomberg First Word News now with Leanne Gerrans. Leanne.
Tom, good morning. Bloomberg has learned that Russia's Gazprom has declared force majeure on at least 3 European gas buyers. That means it could not fulfill its supply obligations due to unforeseen circumstances. Gazprom has already been curbing supplies to Europe and has closed its main pipeline for maintenance. The European Commission is set to warn that a cutoff of Russian gas shipments could reduce GDP by up to 1.5% if the next winter is severe. In Ukraine, the military chief says the situation in the country has been completely stabilized. In a Facebook post after speaking with the chairman of the U.S. Joint Chiefs of Staff, Mark Milley, he said an important factor was the arrival of a new U.S. long-range artillery system. Now, the House Speaker, Nancy Pelosi, reportedly plans to visit Taiwan next month. That's according to the Financial Times, which says there are divisions in the Biden administration over whether Pelosi should make that trip. In April, said a Pelosi visit to Taiwan would be a malicious provocation. Europe's heat wave is bringing water levels in one of the region's most commercially important rivers to dangerously low levels. The Rhine is about 37 centimeters above a mark that would effectively choke off a key bottleneck in western Germany. A drop below that level would mean barges could no longer usefully navigate the river. The field of potential candidates to replace outgoing Prime Minister Boris Johnson is narrowing. Rishi Sunak and Penny Mordaunt retain the top 2 places in the latest Conservative Party voting. More ballots are scheduled for Tuesday and Wednesday, after which just 2 contenders will remain. Johnson returned to Parliament on Monday for one of the last times as Prime Minister for a largely symbolic confidence vote. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Tom.
Leanne, thank you. OK, coming up, fears for Europe's energy supplies as Russia's Gazprom tells buyers that it cannot guarantee the flow of gas to the continent. We have more on that story next. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London. Now, Gazprom has declared force majeure on several European natural gas buyers. It's a move that may signal that it intends to keep supplies capped, reinforcing Russia's grip on the region's energy. For more on this, let's bring in Bloomberg's European energy team leader, Isis Almeida. Isis, what do you make of this move then? We were talking in the break about the uncertainty around Gazprom and they're keeping us on our toes. What is your assessment of what we've heard so far?
I think it was very surprising for a lot of the European utilities to get a force majeure now, since Gazprom has already been curbing supply since last month, like mid last month. And it's very interesting to get a retroactive force majeure. We've never heard of that before. And, you know, there are legal questions around that, I guess. But a lot of people are looking at it and saying, well, it looks like this is the first sign that, one, they either do not intend to turn back Nord Stream 1 when maintenance ends next week, or actually not next week, this week on Thursday, or basically that they intend to keep supplies capped at the 40% capacity that they've been using that pipeline at.
Okay, and it's remarkable to think about it, but 40% would be an optimistic scenario as things stand if they keep it at 40% come Thursday. So what are you looking for on that Thursday's decision from Nord Stream 1? Could they delay the decision? Is it expected to come online? If they decide to put it back online, they come online straight away. What indicators are you and the team going to be looking for?
I think the maintenance is scheduled to end at actually like 6 a.m. Central European time on Thursday. So on Wednesday afternoon, we should start seeing the orders. We should start seeing European companies put through orders. Yes, I want to receive gas tomorrow, but the actual flows we're only going to see at the time, really 6 a.m. Central European time on Thursday. And then we'll see if, you know, we actually get gas flowing or not. The one thing that Gazprom has already signaled is that the turbine that, you know, one of the turbines that compresses gas to, you know, that goes into Nord Stream 1 was stuck in Canada and it's not going to make it in time. So that is one thing that's fueling concerns as well, that may not come back.
Okay, so that's the time frame. Wednesday, the orders, 6 a.m. CET in terms of whether it comes back online on Thursday. Isis Almeida, of course, from our energy team, thank you very much indeed on the latest from Gazprom and the gas flows out of Russia. Coming up, future-proofing our cities as the heat wave brings soaring temperatures across Europe. We will discuss how our cities need to change to cope with extreme temperatures and the climate crisis. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed. The ECB looks more closely at a 50 basis point rate hike this week. The euro extends gains against the dollar. Gazprom declares force majeure on some European gas buyers, reinforcing Russia's grip on EU energy supplies, plus a brutal heat wave. London may hit a record 40 degrees as extreme temperatures ravage Europe. Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London. Let's check in on these markets then as investors readjust to the idea that maybe the European Central Bank will go for 50 basis points, having very clearly flagged 25 basis points. 50 basis points now, Thursday on the cards. The money market's pricing in more than 100 basis points in terms of ECB rate hikes by September. Of course, this would be the first rate hike of that size and scale for at least a decade from the European Central Bank. You're seeing moves in the euro dollar, as we mentioned, the headlines up strongly. In terms of the markets, though, equity markets, you're seeing losses of 0.6%. The US 2-year at 3.15, that's a 2 basis point move. Euro dollar 102, gaining 0.9%. And Brent 106 on Brent, gaining just 0.1%. The yield picture as well in focus for us. There's the euro dollar, again, jumping almost 1%. In terms of yields, you're seeing moves higher, particularly pronounced at the front end. German 2-year, you're seeing a 9 basis point move in yields. Italian BTPs, 166 on your 2-year. That is a 9 basis point move there as well. Again, if we adjust to the possibility of 50 basis points from the European Central Bank, and the front loading, at least, it seems, for officials here as they weigh up the inflationary impacts of a shortage of gas, in particular from Russia. Now, temperatures in the UK are forecast to hit record levels on Tuesday. The heat wave has already caused transport disruption, with workers told to stay home and warnings issued by health officials. Southern Europe is also dealing with record high heat.
I see only people which are really convinced that this is the challenge that we must overcome, but it's all about speed. We need more speed. And this weather, as you rightly said, is a stark reminder that global warming is already happening now.
I want to make an obvious statement that climate change kills. It kills people. This we have seen. It kills our ecosystems, our biodiversity. It also destroys the things that the societies affected by these fires hold dearest: their houses and homes, their businesses, their livestock.
I have to say, and I say this with all sincerity, that many of the commitments that we heard in Glasgow remain just that. They are still just words on a page. And you know, because you can see this around you, all the evidence tells us that time is running out. From the science of the IPCC reports to the heat waves, the wildfires, the droughts and the floods to which the world is now increasingly witness. So friends, on every single one of the commitments we made in Glasgow, we simply have to quicken the pace.
Okay, Alok Sharma, of course, the last voice there on the urgency around this issue. Let's bring in now Bloomberg's Leanne Gerrans. And Leanne, if anyone doubted the climate crisis, then this week across Europe is confirmation of just how severe this issue is and the fact that it's already taking a toll not just on infrastructure but on lives as well.
Yes, indeed, Tom. And you just heard that from Pedro Sanchez, the Prime Minister of Spain. Actually, Spain has seen record temperatures, and we do know they've had 360 deaths in the last week. That's due to extreme heat. And also June was the deadliest month in 2 years for Spain. So Pedro Sanchez did say there that climate change does kill. And this could possibly be the new normal now, Tom, as we did see temperatures here in the UK reach 38.1 degrees yesterday, not the high of 38.7 that was recorded back in 2019. But today, the Met Office is expecting things to reach between 41 and 42 degrees. So we are seeing temperatures really increase across Europe and, of course, here in the UK.
Okay, Leanne Gerrans, thank you very much indeed on the latest across what is happening with the weather front. 41, 42 degrees, remarkable, and how that could be the new normal. Let's bring in now at this point Gregory DeWerk, founder and CIO of AO PropTech. It's Europe's largest technology-driven real estate venture capital firm, and AO PropTech is focused on tackling climate change through the real estate industry. It is the world's most polluting asset class. Gregory DeWerk, thank you for your time this morning. Just what is the risk level for our cities and our infrastructure with temperatures at these levels?
Good morning, and thanks for having me. I think the risk is extremely high, and I think we're starting to understand with this heat wave, for example, but more broadly with some of the extreme weather that we've been witnessing over the last few months, that the risk associated with climate change to our physical world, to our built world, is going to impact the livelihood and the well-being of pretty much every single person in the developed world, because most of us are living in cities, and this is a trend that's not going anywhere. So I would say that we are now getting kind of a small preview of what the future holds for us, and it's very worrying.
Yeah, a small preview of a frightening future, potentially. Gregory, with your expertise in real estate, and again, given the emissions that come out of that sector, what is your view on what needs to happen now to cut the emissions within that space?
So what needs to happen is a global coordinated plan between investors like us on the private sector, so venture capitalists, government and policymakers, because this is not a fight that just private capital can solve on its own, and the government needs to intervene with investments, but also thoughtful tax incentive and policy making to make sure that we enable to push this innovation throughout. So when you look at the real estate industry, its emission, which is 40% of global greenhouse gas emission, it's coming from two parts: the embodied carbon, which comes from the material and the construction that goes into those buildings, and then let's call it the operational carbon that comes from the daily operation, heating and cooling of those buildings. And so for us, we want to make sure that we focus our resources and our time in what moves the needle. So the existing stock of building is extremely important, and retrofitting technologies that are going to improve the efficiency, reduce the emission, and reduce the wastage is going to be critical on our fight towards climate change.
And what do some of your portfolio companies offer in terms of solutions to kind of build resilience then into our cities, into our buildings, and reduce that energy use once it's operating, and of course those input costs as well, at least the input and the carbon emissions from those inputs?
So I can give you a few examples, but for example, we've backed a company in the US called Passive Logic, which has created a first fully autonomous building management system that's leveraging artificial intelligence to run those buildings. So they will consume much less energy, they will emit much less carbon, and they will allow pretty much any building on planet Earth to become a very smart consumer of energy. That's one example, but if you go a step above that, you'll be able to measure where the problems are coming from. And so we've backed a company in the UK called Satellite View, which is launching a constellation of satellites, which will be able to map out the carbon footprint, and the carbon efficiency of pretty much any single building on planet Earth. And what that allows us to do is not only asset owners, but policymakers, regulators, cities, to have access to a single source of truth so they can decide where to allocate their resources to target the buildings that are most at risk both in terms of their emission, but also their critical kind of infrastructure health. And lastly, we've backed a company called Climate X, which allowed any stakeholder to measure what is the climate risk associated with the risk coming from climate change, increased temperature, increased risk of flooding, whatnot. So there are a number of companies out there, and we see brilliant entrepreneurs coming our way.
And Gregory, you talked earlier about the alignment, the need in terms of aligning the regulatory response with private capital. Are you getting a sense of urgency now from our officials, from regulators around this issue? Are they picking up the phone and giving you a call? What is your sense of just how urgently they're looking to approach this?
We definitely see, that we're going in the right direction. There are some interesting policies that are emerging in Europe around, the need to decarbonize, particularly the need to report, and that would be very, very punitive for asset owners that are not compliant. But we need a lot more, and we need a lot more concerted efforts, because one of the gaps in the market is sometimes split incentives in the real estate market. What I mean by that is, if you're an asset owner and you're going to spend all that money to retrofit your building, it might not benefit you, it might benefit your tenant. And so the incentives of doing it are a bit mixed. So the government needs to step in to make sure that they align the interest of all the stakeholders for adoption to happen at scale and very fast. We're on the right track, but we're still a long way to go.
Okay, very interesting. Gregory Dewert, founder and CIO of AI PropTech. Thank you very much indeed. A big player in terms of funding climate solutions, particularly around infrastructure and cities. Right, coming up, China's economic outlook in focus as Beijing tries to control COVID outbreaks and the country's deepening property crisis. We will discuss with Kei Yu-jin from the London School of Economics next. This is Bloomberg.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Welcome back. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London. Right, let's get your Bloomberg Business Flash now with Leanne Gerrans. Leanne.
Hi, Tom. The French government has offered to pay about 9.7 billion euros to fully nationalise power utility EDF. Problems at the electricity generator are exuberating Europe's energy crisis. The state will offer €12 a share to acquire the 16% of EDF it doesn't already own. That is a premium of 53% to the closing value of €7.84 for EDF shares on July the 5th, the day before the French Prime Minister Elizabeth Borne announced the nationalisation. Now, Apple is said to be planning to slow hiring and spending growth next year in some divisions as the company copes with a potential economic shutdown. Sources have told Bloomberg that the decision stems from economic uncertainty, although it isn't a company-wide policy. Apple is still planning an aggressive product launch scheduled in 2023 that includes a mixed reality headset. Mining giant BHP has joined Rio Tinto in signalling more turbulence to come for commodity producers. BHP is the world's biggest mining company, warned of slowing global growth due to the war in Ukraine, Europe's energy crisis and tightening monetary conditions. It also said cost pressures would linger over the coming 12 months. Rio made similar dire remarks last week. Goldman Sachs is planning to slow hiring and reinstate annual performance reviews that were suspended during the pandemic. CFO Dennis Coleman said on a conference call with analysts that the bank is taking action to cut spending and improve efficiency. Goldman and other big Wall Street lenders, including Morgan Stanley, JP Morgan and Citigroup, reported substantially larger workforces in the second quarter compared with a year earlier. And that's your Bloomberg Business Flash. Tom.
Leanne Gerrans, thank you very much indeed. Right, let's get to what's happening in the world's second largest economy. And China's economic outlook for the second half of this year will likely be determined by the government's shaking control over coronavirus outbreaks and the property market. Joining me now is Professor Ke Jin, a professor of economics at the London School of Economics, who joins us out of Beijing. Ke, thank you for joining us this morning. This remarkable prospect then of homeowners stopping paying their mortgages. We've seen, of course, property companies and their bonds under pressure, the banks themselves being called in by regulators to try and address this problem. That the housing market of China has been written off many times before, and it's never quite happened. They've always managed to sustain the housing market broadly. Is this time different? How do you see this playing out?
It's a constant process of fine-tuning and adjusting, just as we've seen with financial deleveraging in the past few years. I think there's a real serious commitment to deliver on the message that houses are to be lived in rather than to be, making financial gains on. And the government has been serious, but as it's always been the case, there's an over-dialing, maybe an overreaction. And of course, property sector accounts for, by some accounts, 25% to 30% of economic output. Local governments' coffers rely on the property sector. The whole consumer sector, confidence from business to households, all depend on the property sector. And now they are readjusting and taking back a few steps and easing policy. And, it's really ironic that it used to be so difficult to buy a second home. The Chinese have come up with all kinds of creative measures to meet the requirements. And now the government is trying to instill confidence and encourage them. But this is not going to be enough.
Yeah, not long ago that we saw people putting in place at least divorces, at least on paper, to enable them to do that and buy second homes. Now things are changing. We're seeing falling sales. Just to be clear, Professor, do you think they have a grip on this, or is there a risk that this runs out of control? You talked about the fact that regulations often go over the threshold and they dial it back a bit. Is this time different? How much confidence do you have that they can maintain this, contain this, or are they facing a Lehman moment?
They're trying to build confidence in the economy, confidence for the household and homeowners and home buyers and companies, etc. But this takes time. It takes time for that sentiment to recover. But time is not afforded to non-state developers on the burst of collapse, outright defaults potentially. And a lot of the debt that they hold is dollar-denominated debt, which is of course much more difficult to renegotiate and resolve. So it will take a lot of aggressive measures to be able to solve, to salvage the situation. And I'm just worried that timing is just not going to be enough. Yeah.
Okay, so really question marks around the timing of all of this. The other reporting that we've been doing, our team on the ground in Beijing and Shanghai, is around the flow of talent out of China, the wealthy and those innovators and creators and entrepreneurs. Does China risk a loss of talent and a loss of some of the secret sauce that's driven so much of the innovation that's driven this economy in the last couple of decades?
In the short term, and this has also a lot to do with the stringent COVID policies. You know, the pendulum often swings in one direction and quickly swings in the other direction with even, you know, greater verve. I'm still quite sanguine about the dynamic entrepreneurialism in China. The opportunities there, the markets are huge. The government has come out to say, give active public support for technology companies. They will return. I think it has a lot to do with the near-term policies, but in the longer term, you know, China's open for business.
That's an interesting take, and that kind of brings me on to my next question, which is that we remember the 1990s, and we remember Jiang Zemin and this kind of unofficial agreement between Jiang Zemin, the head of the country at the time, and entrepreneurs and the business elite, that they could work together. Has that unofficial agreement started to fray, do you think?
There is a new paradigm in the Chinese economy, and it's important to understand what it is. It's about severing the links between power and money, and we're likely going to see that taking into more speed and more, more importance going forward. That means the companies are going to be reined in more. They're going to be monitored, surveilled. Much more than before, where they were given practically a free rein during the Deng Xiaoping era and in the Jiang Zemin era as well. Not so anymore. Big corporations going to be constrained. But again, that doesn't really necessarily hurt entrepreneurial dynamism. It's just that they're going to have to operate in tighter regulatory grounds than before. And we're less likely going to see these explosive unicorns, you know, going from $0 to tens of billions of dollars in 3 years. That kind of phenomenon is less likely going to happen. But you can bet that the young entrepreneurs are still as excited as before to create value in society.
Okay, that excitement is still there. I'm also thinking back to the kind of hard-nosed reformer of Zhu Rongji again, the 1990s, early 2000s. Is there a Zhu Rongji of the moment to help China correct its economic course and get back to that growth target of about 5.5%?
Well, sometimes it has to get much worse before it really gets better and the pendulum swings in the other direction, and we can potentially see that. Now, I'm not hoping that the Chinese economy is going to slip even more going forward, but if it does, then I think there will be a full embracement of economic pragmatism in the near future. But I think that this is really, again, a process of learning and adaptation, even with stringent COVID policies, is getting to know the virus and getting to know how to deal with the virus. And so we're less likely going to see, I believe, full lockdowns that we have seen in the past, but now there's smarter ways, more efficient ways to deal with it, and then they're just going to have to adapt to the new circumstance.
Okay, Ke Yu-jin, Professor of Economics at LSE, always insightful on the economics and politics of China, the pendulum swing as we watch that regulatory response to, of course, the real estate sector, technology, and COVID-0. Thank you very much indeed. Coming up, Apple has said it will slow its hiring and spending growth next year in order to cope with a potential economic downturn. More on that story after the break. This is Bloomberg.
Everyone you meet in Port Harcourt has stories about what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Daybreak with Lee. On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London. Now, as we head into tech earnings season, Apple has said it will slow its hiring and spending growth next year in order to cope with a potential economic downtime. Joining me now is Bloomberg Quick Take's Alex Webb. Alex, why is this particularly significant then from Apple? It's not the first tech company that said we're going to reduce headcount or at least slow the hiring.
Well, for much of the past 2 years, Apple has remained relatively resilient compared to a lot of the other tech players. And you almost expect the likes of Google and Facebook to be hit because they're fundamentally advertising companies. And of course, the first thing that gets cut in a sort of recessionary environment or any economic downturn, the marketing budget. So marketing companies say we're going to spend less on advertising, therefore Google and Facebook and the others, Twitter, feel it. Apple, it's a little bit different. This is more clearly to do with the inflation story. If you're in the business of selling people a new iPhone every year or two, usually it's every 2 to 3 years, people refresh, people can't necessarily access $1,000 to buy that iPhone, then of course their sales perhaps are likely to be hit. And so that's why there's perhaps a little bit of skittishness around Apple's stock down 2% on this report because of that read-through.
Yeah, and we saw that skittishness permeate through the US markets yesterday. So we'll continue to watch the tech sector for adjustments around headcount. Meanwhile, of course, Alex, it would be remiss of me not to ask you about Twitter and the latest when it comes to the legal standoff between Musk and Twitter. What are we hearing?
So Twitter's lawyers have filed a new document which says that the bots claim coming from Elon and his lawyers is an irrelevant sideshow. There's a lot of sympathy for that view. I would point people towards Matt Levine's column this morning in which he says ultimately this is kind of true because the filings that Twitter has made historically have said our best estimate is that 5% of our monetizable active users are bots. But it could be more if you calculate it differently. This is our best estimate. And so they give themselves plenty of wiggle room in that space. Therefore, the real issue has to be about, did they breach the merger agreement? And it looks as though Twitter's lawyers have a lot of work. So Elon's lawyers have a lot of work to do.
Okay, Alex Webb from Quick Take across the Twitter story, but also Apple as well. Thank you very much indeed. Bloomberg Surveillance Early Edition continues in the next hour with Matt Miller, Kayleigh Lines in New York, and Anne Edwards here in London. The market's currently, European stocks off 0.4%. You're looking at upside, though, with US futures. This is Bloomberg.
almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada, 1-2 itu ada. Tapi nggak kayak dulu, kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu. 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
There is a lot of demand in the US economy, and this very high rate of inflation is not yet causing consumers to tighten their purse strings a lot and stop spending.
No matter how troubled the US is, there are other countries that are in worse shape.
At the end of the day, US has much higher risk tolerance to conflict in Europe.
I think we are in an extremely data-dependent world.
The focus now is on margins, is on quality, incrementally on growth, and that's where we encourage investors to look.
This is Bloomberg Surveillance, Early Edition with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. The ECB may double down on its first interest rate hike in more than a decade. Policymakers could deviate from their earlier guidance and boost rates by 50 basis points. The UK swelters as it expects record-breaking temperatures today. Meanwhile, France takes aim at Europe's energy crisis by offering almost $10 billion to nationalise power producer EDF. And big tech's troubles. Apple joins others in the industry who put a lid on hiring. Investors will scrutinise results from Netflix to see if it's found a way to end massive subscriber losses. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. And Kaylee, certainly tech in focus with that Apple news, and we wait for Netflix. But here in Europe, the ECB story developing pretty quickly.
Yeah, potentially a half-point move coming on Thursday, even though they have been beating the drum to a 25 basis point hike for some time now. So it'll be interesting to see how that plays out 2 days from now. But as you say, Anna, the story today really is on technology, and that definitely was true in Asia overnight. Yes, the MSCI Asia Pacific Index was really little changed, up just fractionally, not even 0.1%, but the underperformance came from China and Hong Kong. Now, for China, of course, we have ongoing concerns around COVID zero policy and rising COVID cases, as well as the turmoil in the property sector as people essentially boycott paying their mortgages on unfinished projects. But the other issue in that was dragging on Hong Kong in particular is technology. You still have the regulatory overhang from Beijing, but also just sentiment around tech, not great overnight considering that hiring slowdown news surrounding Apple. So the Hang Seng Tech Index down about 1.5%. In other asset classes, the bond market in particular, a big move at the short end in Australia, up 9 basis points on the 2-year to just about 275, 276 after the deputy governor of the RBA says the economy can tolerate higher rates. So that is leading traders to price in potentially a higher rate even at the end of the year. And finally, in foreign exchange, pretty much everything in G10 is stronger against the US dollar today, including the Japanese yen, Matt, trading at 137.76.
All right, we'll watch that dollar very closely. Right now, we do see futures higher after the turnaround that we saw in the cash trade yesterday, currently up about 0.5% as investors take money out of treasuries. That drives the yield back up, though not quite yet to the 3% level, almost there, 299.11, and we did, of course, eclipse that yesterday. NYMEX crude is coming off. We had a big run yesterday and then a turnaround there as well, now down 72 cents to 101.88, so Texas Intermediate holding above $100 a barrel, and Bitcoin rising right now 2% from midnight, though not as high as we saw it yesterday. We saw it over 23,000 yesterday, right now at 21,903. So that reversal yesterday, Anna, brought things back down to a level where they can now rise again. What are you seeing in terms of the European trade?
Yeah, Europe catching up a little bit with the late in the day vibe from Wall Street yesterday. So as that Apple news broke after the European markets have closed, we're sort of factoring in that and the way that that labour market story is perhaps weighing at the margin on expectations for risk assets. So a little bit of a pullback in some stocks this morning, down 0.2% on the FTSE 100. The CAC and the DAX both down by more than 0.4%. So we catch up on the US news flow, but we also have something new to bring to the party, and that certainly has impacted the euro today. So it seems as if the ECB is going to be thinking about a 50 basis point hike, at least considering it. They're going to give more serious consideration to that possibility, at least. And that news flow coming through this morning from a number of news outlets, and Bloomberg has that story as well, has pushed the euro higher this morning, up by 0.9%, up to 1.02. Remember, we were talking about going back down through parity. We've been lower than 1 in the pretty recent past. The pound also moving higher. Again, to Kaylee's point, it is a dollar weakness story, but also we have a really tight labour market here in the UK. Are we talking about peak tightness in the labour market? New data on that front this morning, and that has some people thinking about whether we'll get 50 basis points from the Bank of England when we next hear from the BOE. EDF, this is the French energy business that is being nationalised by the French government, so that is the way that the French market is trying to invest in infrastructure and also protect consumers from the heights of these energy prices. They're offering 12 euros a share. You can see it's a premium to where we're trading at this point. A little bit of risk perhaps being priced in there. Wise, this used to be TransferWise, is a money transfer business listed here in London, a sort of fintech darling. That stock up by just over 16% as the company delivered, Kaylee, better numbers than had been anticipated.
All right, Anna, well, let's get a look now at what is ahead today. Anna was just mentioning the BOE, and we will be hearing from Governor Andrew Bailey later on, as well as UK Chancellor Naheem Zahawi addressing the annual Mansion House event at 11 a.m. New York time. Plus, UK Conservative Party MPs will vote for a 4th time in the contest to elect Boris Johnson's successor. And the Bloomberg Crypto Summit will be taking place in New York. Speakers include billionaire Sam Bankman-Fried and Mike Novogratz. Matt and I will both be moderating panels this afternoon. And finally, tech earnings kickoff. We've mentioned this, Netflix reporting after the close, Matt.
Yeah, I'm very pumped for the crypto summit this afternoon. But right now, let's focus in on central banks. The ECB may consider raising interest rates on Thursday by 50 basis points rather than 25. The move would bring the ECB more in line with the global drive for outsized hikes. Bloomberg's Danny Berger joins us now for more. Danny, this isn't really much of an outsized hike, right? Considering they've been at 0 for a decade. It's like something rather than nothing.
Yeah, and considering the Bank of Canada just went 1%, this is kind of peanuts compared, but it is a big deal considering just the explicit guidance we've gotten from the ECB that it will be 25 basis points. It's something Christine Lagarde has talked about, most members as well, to the extent that some people were worried they're being so explicit they might not have flexibility. Now, to be fair, people familiar speaking with Bloomberg did say that it's not clear that there is enough folks at this consensus to get 50 basis points this this week, but it certainly is a possibility. It's a possibility. The market is pricing in front end to the German curve. That's up 9 basis points at one point, now back down to 8 basis points. And now we're pricing in money markets about a 40% chance that we get a 50 basis point move. Now, Christine Lagarde, even though she has said 25, she did give herself some flexibility. She talked at Sintra, for example, that there would be conditions where gradualism would not be appropriate if, for example, higher inflation, de-anchored expectations, if there's more permanent loss of economic potential. Perhaps policymakers have also seen euro parity. Perhaps that will push them to 50 basis points as well. But the one argument, the strong argument for continuing gradualism is BTP spreads. There's, of course, drama in Italy. We've already seen spreads versus Germany because of that blow back out beyond 200 basis points. So if the ECB does go 50 basis points, Anna, they're going to have to outlay their policy to avoid fragmentation.
Yeah, it could be a difficult to interpret message from the ECB on Thursday. I heard that from Viraj Patel a little bit earlier. Thanks very much to Bloomberg's Danny Berger for taking us through the latest news flow surrounding the ECB. Meanwhile, sticking in Europe, Gazprom declared force majeure on several European natural gas buyers, a move that may signal it intends to keep supplies capped. Meanwhile, the French government offered to pay about 9.7 billion euros to fully nationalize EDF. That's after the company's problems exacerbated Europe's energy crisis. Let's get more now with Bloomberg's Isis Almeida, who leads our gas, power and renewables coverage here in Europe. Isis, very nice to have you with us. I mean, does this force majeure from Gazprom, does that tell us anything new, or are we still kind of in the dark as to how Gazprom is going to manage flows into Europe or allow flows into Europe after Thursday?
I think we're still in the dark, but, you know, a lot of people in the market are interpreting this as a first sign that they may not return, right? If you think about it, declaring force majeure retroactively for supplies like since mid-June is rather an unusual way of declaring force majeure, and actually there might be some legal implications there whether that's allowed or not. But I think what people were saying is like this is probably the first time that Gazprom either does not intend to bring the pipeline back or it intends to keep it capped at 40% capacity.
Isis, you know, we're looking at record temperatures here as well as in Europe. But at my house, I just jack up the AC. Do Europeans do that at all?
Well, we don't have the same air conditioning penetration that the U.S. has, right? So it's not exactly the same thing. We anecdotally seen more people buying air conditioners in recent years and etc. But it's nowhere near as the U.S. So yes, demand does increases, especially because of offices. You know, office spaces all do have air conditioning, but it's nowhere near what the type of things you see in Texas, for instance.
All right, Bloomberg's Isis Almeida, thank you so much. And we'll get more analysis on Europe's energy crisis later this hour from Bloomberg New Energy Finance. Now over to Washington, a drive in the Senate to quickly pass a bill with grants and incentives for American semiconductor makers has picked up steam in Congress. Senate Majority Leader Chuck Schumer says lawmakers are hashing out the final details. Emily Wilkins, Bloomberg government reporter, joins us now from D.C. with more. So Emily, are we going to get a vote on this before the August recess?
We're actually expecting to see a procedural vote on this today. That could tee up a vote potentially for passage in the Senate later in the week or next week. And then the House has said that it's ready to move quite quickly on this. A lot of lawmakers want to get this done. Now, Kaylee, remember, this isn't the bigger package that we've been talking about for a while, that U.S. competitiveness bill that had manufacturing, development, research. A lot of that bill has now been left on the cutting room floor because of debates back and forth between parties and different partisan disputes. But one thing that a lot of lawmakers for both parties can agree on is the real need to have this funding for semiconductors, both for national security interests as well as manufacturing interests. You saw Intel delay a potential opening of a semiconductor factory in Ohio, in part because Congress hasn't figured out a way to pass this funding yet. So it's something that lawmakers are trying to make sure they do before they depart for their August recess. The timeline is very critical here. You heard Commerce Secretary Gina Raimondo tell lawmakers the other week that this is very urgent and that they need to move quickly.
Just a note on style. On this show, we call it the great state of Ohio. Emily Wilkins. Nancy Pelosi, Speaker of the House and representative from California. She's going to go to Taiwan next month, possibly. What is she going to do there?
So Speaker Nancy Pelosi is planning on leading a delegation to Taipei. Remember, this was a trip that she had actually planned back in April, but then was prolonged after she was diagnosed with COVID-19. And this comes as you've seen more discussions between the Washington and Beijing top officials. You have that potential President Biden, President Xi call in the mix that hasn't quite been scheduled yet, but a lot of people are looking forward to that potential date. And this trip, it could lead to some potential blowback. You've heard from Beijing's warning against this trip, saying that there could be a strong rebuke as a result of Pelosi visiting, but this would be a very much historic trip. We haven't seen anything compatible to a top-level official like Pelosi visiting Taiwan in about 25 years. And so this would be a very big deal, and this is expected to happen at some point in August.
Emily, thanks very much. Emily Wilkins of Bloomberg Government joining us there from Washington. On to tech news, and we head into tech earnings season, of course. Apple is planning to slow hiring and spending growth next year in order to cope with a potential economic downturn. We saw this have an impact on risk sentiment in the US last night. Bloomberg's Alex Webb joins us now with more. Alex, I've seen different views on this. Some people sort of caught off guard by it, and maybe the markets were in a sentiment sense, but others saying we should have seen this coming.
Yeah, ultimately, we've seen hiring freezes and hiring cuts at these sort of ad tech companies, Google, Facebook. That is something to be expected because when there's any economic slowdown, the first thing that companies cut is their marketing budgets. Therefore, advertising companies get hit. With Apple, it's probably more of an inflation story because they are in the business of selling $1,000 a piece consumer goods. If people don't have as much money, they can't afford to buy them. So you tie those two things together, and you have Apple slowing down some hiring in some departments.
We see on the terminal Netflix is looking for more ways to monetize, especially password sharing. What do we expect to hear from Netflix earnings today?
The numbers aren't looking brilliant in terms of the expectations. The market's expecting a decline in subscribers to the tune of about 2 million people. That's largely going to come out of the US, about half of that from the US. The only ads are going to come in Asia. We've seen big successes there, of course, the Squid Game, but they're expanding their slate there. So it's not looking pretty. That might mean, though, that even just the slightest hint of good news is positive for the stock.
All right, Alex Webb of Bloomberg Quick Take, thank you so very much. We'll look forward to those earnings after the bell today. Now, as for some stocks moving in pre-market trading today, one of them is a company that reported after the bell yesterday, IBM. Revenue actually topped expectations, the strongest growth in more than a decade, so that's a signal that demand is strong. The bad news coming in that the free cash flow guidance disappointed. Part of that due to the loss of business in Russia, the other part of it due to the strong dollar. And I wonder how much we're going to hear that from other companies this earnings season. Nonetheless, IBM down about 5% before the bell. To the upside, though, is Snap. We got news yesterday that it's rolled out its desktop application for customers in the US and the UK, so now you can Snapchat video call on your computer. The stock was up about 2% on the back of that yesterday, up about 1% in early hours this morning. And finally, we've talked about the rally, the recovery we have seen in Bitcoin over the last several days. That has provided a lift to crypto-related stocks, and that continues in early hours this morning. Coinbase up about 2% before the bell. Of course, we'll be talking about all of the volatility, all of the action in this space at the Crypto Summit later today. Anna.
Kaylee, just some breaking news to cover off because it ties into what we were talking about with Isis Almeida a moment ago. The EU Commission now does not expect Russia to restart Nord Stream, the pipeline that runs, of course, from Russia into Europe. It's been closed for maintenance. There have been plenty of speculation as to whether it will restart. We'll see what Russia intends. But now the European Commission moving to a point where they are now saying that they do not expect those flows to restart. We've seen some draft publications from the European Commission saying simulations by the Commission and gas system operators show a cut-off of Russian imports in July would mean the EU reserves would be filled by 65 to 71% at the start of November. That leaves us going into the winter below target of 80% full. So we'll have further analysis on this as we go through programming. Coming up, we get back to the other big story in Europe this week, and that is the ECB. Christian Kopf joins us, head of fixed income and FX at Union Investment. Will this kind of news flow stop the ECB going for 50 and make them go for 25? We'll talk about that. The Bloomberg Crypto Summit returns today in New York. The summit gathers some of the biggest names in the industry, including billionaire Sam Bankman-Fried and Mike Novogratz. The summit starts in person and virtually at 8:45 a.m. New York time and continues all day. Matt and Kaylee, of course, will be there. This is Bloomberg.
companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Earnings season is here.
Buzzwords this earnings season: recession, inflation, foreign exchange, layoffs.
We are starting to see, well, the world get a little bit more cautious about what these earnings are going to look like.
Bloomberg breaks the numbers first.
Second quarter earnings at Delta Airlines missed expectations.
When that inflation print hit, my eyes were on Amazon in particular.
With exclusive expert analysis.
The issue here really is elevated costs.
If you take a look at the projections, that is the story.
Bloomberg Television and Radio, the fastest numbers and analysis you trust.
Welcome back to Bloomberg Surveillance. This is the early edition. I'm Matt Miller here in New York with Kaylee Lyons, Anna Edwards with us out of London. We are having a fantastic Tuesday morning. Markets getting amped up for some big rate rises from central banks. I've got a chart here for those of you listening on radio. I'll walk you through it. We're looking at 80 basis points being priced in for the Federal Reserve. For the Bank of England, 52 basis points priced in, and now 35 basis points being priced in for the ECB. And we're hearing reports from Reuters, and now Bloomberg, I guess, has matched that the ECB is leaning towards 50 basis points. Maybe somebody there is floating a little bit of a trial balloon. Bloomberg Markets reporter Justina Lee joins us now to tell us about, well, the reaction. Justina, what do we see?
Well, of course, we've kind of seen bonds slumping and the euro strengthening a little bit. I mean, after all this time, we used to talk about the ECB kind of having to play catch up, and now it seems like they are also getting worried about inflation. Now, of course, the question for ECB is a bit more complicated because they also have to worry about the effect on the fragmentation of the euro area. You know, what's going to happen to those Italian bond yield spreads? But at the same time, of course, with kind of the euro weakening to a parity level against the dollar, I mean, that's kind of another concern that could put pressure on inflation.
More broadly, what are you seeing on bond markets at this point, Justina? I know that's been a focus for you of late.
Yeah, it's kind of interesting that in U.S. Treasuries, we've kind of seen a bit of a rebound lately to the extent where the 10-year yield looks a bit stuck at the 3% level. I think there are a lot of investors that see, a 10-year yield at 3% as pretty attractive, but inherently kind of what's built into that is, in a way, you have to have confidence that the Fed will eventually get inflation under control. And I think that's kind of a question in the U.S. right now. Are we starting to see inflation peak? I know we've kind of all been saying this for a few months and it's never happened, but the dollar strength should help. And at the same time, hopefully we'll also see some supply side factors kind of easing as well.
Okay, we'll have some analysis on the dollar strength and where we go in FX markets shortly. Thanks very much to Bloomberg's Justina Lee. And for more market analysis, check out MLIV Go. That's the function on the Bloomberg terminal. They're all over that latest pivot from the ECB and other moves. Commodities also of interest this morning. This is Bloomberg.
city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lines with Matt Miller in New York and Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. The field is narrowing in the battle to replace Boris Johnson as British Prime Minister. Rishi Sunak and Penny Mordaunt were the top two candidates after Monday's voting by Conservative MPs. Another vote today will whittle down the field from 4 to 2. China is denying a report that President Xi Jinping invited top European leaders to meet him in Beijing and is still waiting for their response. The Foreign Ministry called the report in the South China Morning Post, quote, fake news. The newspaper said the invitations had gone out to the leaders of Germany, France, Italy, and Spain. Twitter has dismissed Elon Musk's complaints that he doesn't have enough information about spam and robot accounts. The company called it an irrelevant sideshow. It urged a judge to hold a trial as soon as possible over Musk's cancellation of his $44 billion takeover, and will await news on that later today. And finally, Bloomberg has learned that Anthony Scaramucci's Skybridge Capital suspended redemptions in one of its funds. That followed sharp declines in stocks and cryptocurrencies. The Legion Strategies Fund suspended redemptions because private companies, which are harder to sell, now make up about 20% of the portfolio. Anna?
Kaylee, coming up on the program, we'll talk about FX and fixed income. FX, a really good place to start this morning. Christian Kopp joins us, head of fixed income and FX at Union Investments. We will certainly focus in on what we're hearing from the ECB. The ECB, according to our reporting here at Bloomberg, looking more closely at a half-point rate hike this week. That has pushed up the euro this morning. More on that shortly. This is Bloomberg.
estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. The ECB may double down on its first interest rate hike in more than a decade. Policymakers could deviate from their earlier guidance and boost rates by 50 basis points this week. They're trying to fight inflation that's reached a record 8.6%. The UK swelters as it expects record-breaking temperatures today. It may go over 40 degrees Celsius today, 104 degrees in Fahrenheit. Meanwhile, France takes aim at Europe's energy crisis by offering almost $10 billion to nationalise power producer EDF. And big tech's troubles, Apple joins others in the industry who've put a lid on hiring. Investors will scrutinise results from Netflix to see if it's found a way to end massive subscriber losses. They could total 2 million in the quarter that just ended. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons in New York. Matt, it seems we're sort of bridging a gap across the Atlantic. Negative sentiment for risk assets here in Europe, but that's really yesterday's story on the Apple news flow. The US futures picture looking a little bit brighter.
Yeah, that was amazing yesterday to see that the markets turned around on a scoop from Bloomberg pointing out that Apple may slow hiring in 2023. Not even company-wide, but just across a few units. It doesn't take much, obviously. We're back up in terms of S&P futures right now. 2/3 of 1% is the gain that we're looking at as we head just about 4 hours away from the start of trading. Right now, the 10-year yield is coming back down. So investors were selling this debt earlier. Now they're buying it. Of course, when the price goes up, the yield comes down. We're at 298.18. Yesterday, we were back up over 3%. NYMEX crude yesterday had a great rally, then turned around. Now we're seeing it come back down a little bit further to 101.93 for Texas Intermediate. And Bitcoin continues to rally from midnight, but it also had a topsy-turvy day of trading yesterday because when we talked about it 24 hours ago, it was at 23,000. Now it's at 21,905. Nonetheless, at least we're seeing green arrows there. Anna, what do you see, Kaylee, what do you see in terms of the markets over in Asia and the pre-market movers?
Yeah, well, I'm focused on the pre-market movers because it's tied to that move we're talking about in Bitcoin. Could we actually see it breaking out of the range it has been in for about a month now? You're seeing crypto-related stocks getting a lift once again in pre-market trading, though there is some separate news to note, and that is that Applied Blockchain has entered a 5-year pact with Marathon Digital to host about 200 gigawatts of Bitcoin mining capacity. So as a result, Applied Blockchain is up about 34% before the bell, and after rallying 21% in yesterday's session, Marathon Digital is up another 7.5% this morning. As for some other stories to keep our eye on, of course, you were just talking about that Apple slowing hiring news that we got yesterday. Apple shares are up just about 0.4% at the moment, and of course, we are awaiting those results from Netflix after the bell. We're expecting they could have lost up to 2 million subscribers in the second quarter, but what is that forecast going to look like, and can it help the stock, which is down 68% just year to date? This morning, though, ahead of those results, up about 1% before the bell, Anna.
Yeah, that's an incredible move in that stock, isn't it, Kaylee? Part of the broader tech trend, but also specific to them as well. Let's have a look at what's going on in Europe. I mentioned that we had a slightly less appetite for risk assets. Well, things turning around, being dragged higher here in Europe by expectations for US stocks, and the session still to come there. We see that the Stock 600 has just turned into positive territory, just ticking up a little in the last few hours, or last hour or so. Here we have the euro up by 0.9%. Fast-moving expectations around the ECB. We'll hear from them later on in the week, of course. Thursday, specifically, their rate decision. Will it be 25 or will it be 50? The latest reporting suggesting 50 is on the table and could be discussed. The pound also getting a boost against what is broadly a weaker dollar this morning. So the pound moves higher. We've had Labour data out from the UK today, and that has some asking whether we might get 50 from the Bank of England next time around. Such is the tight nature of the labour market here in the United Kingdom. And here we have the share price in EDF up by just under 15% this morning. The French state offering 12 euros a share for this business. They're going to nationalise it. This is the way that France is trying to cope with all the challenges that the energy markets here in Europe face, trying to invest, they say, but also cushion consumers from higher prices, Matt.
Yeah, so nationalization happening in France. The EU says maybe Russia won't turn the pipeline back on once it finishes maintenance on Nord Stream 1, and that could result in negative 1.5% growth, or a contraction of 1.5% in the worst case scenario. Christian Kopf, head of fixed income and FX at Union Investment, joins us now. Christian, can the ECB really raise rates by 50 basis points in this scenario? Did we lose Christian? That's sad because he had such an amazing shot set up. You could actually see the ECB over his right shoulder. I thought it was absolutely brilliant.
We were joking with him in the break, weren't we, Matt, that he should work in TV. He clearly has such an eye for the visuals. He set up this perfect shot for us.
And we should point out what happened.
Which is a shame.
The first time he set up a shot with his iPad, he said the heat caused the device to fail. That's the extent of the crisis in Europe, which causes me to ask, as I did almost every day during the summer when I lived in Berlin, why don't Europeans use air conditioning? It was invented in 1902.
I know. I can see how that looks like the short-term solution. It doesn't feel like the long-term fix, though, does it? But I think you've got Christian back now.
Well, it works well here, and it has for my entire life, and I'm quite old. Christian Kopf, you're back with us from Union Investments, back inside, thankfully for you, because it's so hot out there. Is it possible for the ECB to raise rates 50 basis points in this environment?
Well, I'll tell you one thing, you know, with temperatures approaching 40 degrees Celsius here in Frankfurt and all video equipment breaking down simultaneously, I think it's going to be tough for the ECB to really go out and surprise markets with a 50 basis points rate hike this week. I think, you know, the leaks that we've seen today and that have been reported by Bloomberg have to be taken with a grain of salt. And that has to do with the way the ECB communicates as opposed to the Fed. When the Fed leaks something to the press, you can be sure that this is the message that they want to convey, and they want to avoid surprising the market and doing a rate hike that is not priced in. When the ECB governing council members leak stories to the press, the only thing it tells you is that there is disagreement in the council. So I really wouldn't overinterpret that story that Bloomberg and Reuters brought this morning. And I still think that in a situation where we just heard the European Commission announcing that they do not expect gas flows from Russia to resume, and the anti-fragmentation tool is not ready, I don't think that in this situation they will go for 50 basis points hike. But, you know, I'm willing to get surprised.
Okay, that's a really interesting take then, Christian. So with the Fed, it's a deliberate message. With the ECB, it just shows disagreement in your view. What is the worst case situation here for Europe if we do see Russian gas not restart into the European economy? I ask this because yesterday and today we're covering this European Commission report that suggests 1.5% downside to the European growth narrative as a result of that. Is that all? Does it get a lot worse? I imagine it will look a lot worse than that in Germany.
I think it will look a lot worse than that in Germany, but in France, it won't have much of an impact on economic activity. I think for the euro area as a whole, a ballpark figure of around 2% decline versus baseline sounds reasonable to me in the scenario of a complete stop of gas supplies to Europe. We will have a number of industries that will be severely affected. That's the steel industry, paper and packaging, aluminium production, the pharmaceutical industry and the chemical industry. But apart from that, I think that the economy can continue to operate. So I think a ballpark figure of 2 to 3% decline versus baseline sounds reasonable to me.
What are you going to be looking for on the fragmentation tool, Christian, from the ECB this week? I spoke to you, heard earlier from Viraj Patel at Vanda Research. He was saying that the ECB could be a confusing policy mix because on the one hand, yeah, of course, they want to tighten policy to fight inflation at 8.6%, but there's the issues around Italy.
Yeah, so the tool is supposed to be called Transmission Protection Mechanism, TPM. That is what has been what we've learned over the last couple of days. And my sense is that there is still disagreement within the Governing Council on the exact way it will be designed, especially on the issue of conditionality. Keep in mind that there's still an open issue between the ECB and the German Constitutional Court in Karlsruhe. If they come up with a tool that provides unlimited interventions with little conditionality, I think there's a very high chance that it will be stopped by the Constitutional Court in Karlsruhe. So my sense is that actually the ECB is not ready yet, has not found agreement to put the whole thing into a legal act. And I think there is scope for disappointment at Thursday's meeting because we do not know the details of the upcoming tool.
Well, of course, we'll be closely watching for any FX reaction to Thursday's meeting with Eurodollar trading right now at 102. And clearly, we had a breach of parity just last week, Christian. But it's both a story of euro weakness and dollar strength. And I'm wondering how close we are to that peak of dollar strength.
Yes, that's a very good point. Now, when you look at Eurodollar, you know, we had this big movement from parity to 102.40 this morning. We're at 102.30 or so right now. That has to do with, I think, profit taking, with risk squaring ahead of the ECB meeting on Thursday, and now with the Bloomberg story this morning that the ECB is considering a 50 basis points rate hike. Now, my personal view is that this is likely going to peter out. We won't not get an agreement on the anti-fragmentation tool. The ECB will most likely not hike by 50 basis points, and then the euro can take another leg down, maybe below parity. Now, with respect to the broader dollar, I found it very interesting to watch what has happened this week in Latin America. We've seen very forceful interventions by a number of central banks here, and they've met little resistance in the market. So I think the broader dollar may slowly be reaching its peak here. The market is pricing in substantial rate hikes by the Fed. The Fed will likely deliver on those rate hikes, but I don't see the Fed moving beyond 3.5%. If that is not the case, the dollar on a broad basis can soon peak.
What do you see in terms of outflows from Germany, from Europe to the U.S.? Is 3% an attractive yield, or are there other places on the curve that foreign investors like in the U.S., especially with a strengthening dollar?
Well, what has happened here is that the dollar has traditionally been an asset currency, and with the Fed's super aggressive rate cuts, it turned into a funding currency 2-3 years ago, and that is now totally reverted. And the dollar is again an asset currency with one of the highest running yields in G10, no? But that is already in the price, yeah? So I think the asset allocation shifts that it would have triggered have already happened to a large degree. I don't see people moving further into the dollar because of what we've seen here in terms of interest rate differentials. Europe is another story. Europe has its own problems with gas supply and with Italy. So Eurodollar could move further down, but the broad dollar, I think, could stabilize at these levels.
Christian, thanks so much for your time. Really good to speak to you. Christian Kopf of Union Investment Private Funds, thank you very much for coming to talk to us. Glad we managed to resolve the tech issues. A little bit of air conditioning on the technology certainly helped in that situation. Coming up on the programme, Europe's energy crisis, how the extreme temperatures are pushing power systems to the edge. This is Bloomberg.
what's happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
I see only people which are really convinced that this is the challenge that we must overcome, but it's all about speed. We need more speed. And this weather, as you rightly said, is a stark reminder that global warming is already happening now.
I want to make an obvious statement that climate change kills. It kills people. This we have seen. It kills our ecosystems, our biodiversity. It also destroys the things that the societies affected by these fires hold dearest: their houses and homes, their businesses, their livestock.
I have to say, and I say this with all sincerity, that many of the commitments that we heard in Glasgow remain just that. They are still just words on a page. And you know, because you can see this around you, all the evidence tells us that time is running out. From the science of the IPCC reports to the heat waves, the wildfires, the droughts and the floods to which the world is now increasingly witness. So friends, on every single one of the commitments we made in Glasgow, we simply have to quicken the pace.
Various leaders and executives there speaking about climate change, including the COP26 President Alok Sharma talking about heat waves. And on that subject, the scorching heat wave currently tormenting Europe and the UK is pushing power systems to the edge and testing energy policies. Joining us now to discuss is David Hostert, Head of Economics and Modeling at Bloomberg New Energy Finance. So David, when we look at the current heat wave, what is the likely impact of extreme weather events like it on energy asset operations?
Yeah, it's not just us who are burning up, it's also the power system, specifically the thermal fleet. So when we look at the power system, we're looking at the thermal generators, which is coal, gas, nuclear, and we're looking at renewables. And what's happening with the thermal fleet is that the efficiency just goes down. If you have a gas plant that's running in this extreme heat, it's going to be less efficient. If you have a nuclear plant, you're going to have to shut it down because nuclear plants need rivers to cool them, right? So as the water temperature rises, you can't cool nuclear plants and they shut down. And we're losing all that capacity, and that means the grid is way thinner. And in fact, we yesterday had a situation in the UK where there was a capacity market notice, which means the system says, hey, we're in trouble, we're stressing here, there's not enough capacity to meet demand. And what that means is that power prices are shooting through the roof.
Power prices going through the roof. David, good to speak to you. Yeah, so reading about the impact that the heat has on the power grid and the power network, it seems that it's not just gas where you have an issue with the infrastructure getting too hot, but also some of the future sources of energy, such as nuclear and even solar, struggling with some of the heat, which seems interesting. Matt and I were talking about air conditioning a moment ago and talking about, obviously, lower uptake of that in Europe. Is that something that you see changing? And if so, is that going to be the answer? Is that going to be something that policymakers are happy with? Because that results in more energy use.
It does, and AC is just another source of demand, right? So if you look at Spain, for example, at the moment, Spain has solar power, and solar power actually helps, as does wind. But with the uprise of air conditioning, that you want to turn that up in the evening, right? When you want to have cold in your bedroom, and that's not when the sun shines. So solar generation and air conditioning use are misaligned, and that's another challenge that we need that flexibility to shift around. So in Spain today, gas burn, which is very expensive Russian gas at the moment, is up, and that's a problem.
I have a wife from Spain, and I can attest to the fact that there are no air conditioning units in that country. In Texas, on the other hand, everybody's got one, and they have a really weak grid because well, for the most part, they've not connected to the national grid, and they don't have the balance that other states have. Is there a possibility that we see a collapse?
So grids are another asset that gets strained. So when you have extreme heat, the grid lines will literally sag, and they become less efficient, there's less throughput. And there are risks of rolling blackouts. That's something we've increasingly seen in Greece and hotter countries. And it's just a stark reminder that there's an issue we need to fix, right? So the current temperature rises are about 1.1 to 1.3 degrees above pre-industrial norms. And even if countries meet all their targets, it's going to go twice that, well, again, the same amount by the end of the century. And that's just assuming that we all do what we're supposed to do.
David, I'm sure you saw the EU earlier said the expectations for Nord Stream 1 to be started back up again after maintenance are very low. And yesterday, the EU was saying a worst-case scenario could mean a 1.5% contraction in GDP without that energy. What do you think about that? What do the people at New Energy Finance say when they hear those kind of forecasts?
So we look at gas demand from 3 different angles, right? So the one is household gas demands, that's you and me, that's our boilers. The other is industrial gas demand, that's in industry, and then there's the power sector. And there's a kind of like a chain of how you turn those off. Presumably, probably, industrial gas demand will have to come off first, and then power, and then households. But it's going to be that order, and it will have a real impact on industry if gas keeps rising as it does.
I've heard a lot of climate experts, David, say that these changes are happening more quickly, and you only have to look at the last occurrence, the last 10 occurrences of new peak temperatures all happening in the last 20 years or so in the UK. That's the UK example.
Yeah.
A lot of people saying that this is happening much more quickly than had been anticipated.
That's absolutely right. So we do gas forecasting, we do power forecasting, and I'm going to be honest, we stopped looking at the last 30 years for clues of what the future will be. We now look at the last 10 years because that's more likely, a more likely scenario of what's going to happen next. So historical views, the multi-decadal views, increasingly less likely, and it also means that in long term, our power system modeling, our long-term outlook scenarios will have to take the impact of climate change on the energy system into account. So it is really a complex system.
Okay, David, thank you very much. Thanks for joining us. David Hostert of Bloomberg New Energy Finance. Coming up, we'll continue to discuss the energy crisis with the World Bank President, David Malpass. He joins the team at 8 a.m. in New York, 1 p.m. here in London. This is Bloomberg.
the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
wherever you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in New York. Tom Keene joins us too, co-anchor of Bloomberg Surveillance. He's up next and he's brought along his single best chart. Good morning to you, Tom, from the heat of London. What is on your mind today?
Well, I'm worried about your heat. Stay cool, Anna, as well. We'll talk about that through surveillance this morning as well. Maybe away from economics, finance, investment. Let's look at Stranger Things. How about Netflix this afternoon? And off the pandemic, a fascinating chart of two paths that did well during the pandemic. Everybody needed a toy at home. Matt Miller bought like 3 sets of iPods just to get through the pandemic. And Netflix and Apple doing really equally the same through the pandemic, and then it ended. Late pandemic, Apple sustaining with an ample free cash flow. Netflix a mystery. I believe we do that this afternoon.
Yeah, we're definitely going to look to see how Netflix can monetize the sharing of passwords. You've got a great guest lineup, including David Malpass, World Bank president. It'll be interesting to see his take on the energy shortage along with the heat wave.
Well, the heat wave, I think, has got to fold into it all of a sudden, Matt. It's something that's been there forever. Some really good writing, I think. And the guest you just had on, I thought, was just excellent on it. But Malpass, as president of the World Bank, has to look at fuel, but he's also got to look at the thing that uses a lot of fuel, and that is agriculture. In front and center is a very nuanced world food crisis, pretty much centered right now on the Mediterranean.
Absolutely fascinating stuff to watch. Andrew Sheets, I see joining you there as well. Great show, Tom. Looking forward to it. We are watching a couple of other things on the program this morning, including China now disputing a report in the South China Morning Post that President Xi had invited multiple heads of Europe, including Emmanuel Macron and Olaf Scholz, to come to Beijing and meet with him, and he hasn't received any replies to those invitations. Now, as I said, China flatly denied this report. They're calling it fake news, but the South China Morning Post said that they didn't get a response to any of their questions from Mario Draghi, Pedro Sanchez, Olaf Scholz, Emmanuel Macron. So it'll be interesting to see if they actually meet the Chinese leader.
Yeah, really interesting geopolitical developments to watch. Of course, there's lots going on here in Europe. We're watching the gas narrative. We're watching rising temperatures here in London. To Tom's point, though, we're watching earnings. We're watching Netflix later in the day. We had that surprise in April where they really surprised the market by that slump in subscriptions. The stock down 65% year to date. As Tom said, Stranger Things could be a boost this time around. But the quality and number of rivals is just something that needs to be discussed. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Economic activity that we are seeing now is somewhat unprecedented.
The inflation story for us, maybe it peaked in June.
It is virtually impossible to craft a story where inflation comes neatly back down to 2%.
I think a lot of countries are having to react because inflation goes up when the dollar strengthens.
When you think about what's going on in Europe, I think the worst case scenario is priced in.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio. Alongside Tom Keene, I'm Jonathan Ferro. Together this morning with Katie Lyons, Bramo back. I hope next week. We hope, Tom. Is she back?
Yeah, we
Another
heard
week's
from
vacation, maybe?
John, we heard from a listener in Nepal who saw her.
There we
Bramo
go.
on the edge of Everest. She's past Camp 2, past the ice fall. And I don't know, she's not near the death zone yet. But to the gentleman from Nepal that greeted us this morning, good morning from all of us at Surveillance. And yes, he thought you and I weren't on speaking terms. John, I agreed with him. I said, yeah, that would be true.
We'll get an update from Bramo hopefully later this week. Futures up by about 0.7% this morning. TK, that dollar's weaker. That euro stronger, back through 102.
Yeah, and help me here with a parlor game on ECB. Are we really having a parlor game about how much Lagarde's going to lift? I don't buy it.
According to sources, maybe by 50 basis points. Tom, whether it's 25 or 50, the bigger conversation once again, how small is this window for this ECB to hike interest rates in, given what people expect will happen with growth later this year, and given what may or may not happen next week on Thursday when Nord Stream 1 is meant to come back online? The European Commission said this morning, Tom. It's a short quote. It's pretty straightforward. We don't expect that it comes back.
In addition, John, the window of the heat wave. Do you just assume, John, that what we're seeing once in a century, once in a lifetime, 300 years plus in England, diminishes economic growth, right?
I'm not a meteorologist, Tom, so I'm not going to assume anything about the weather, but when it comes to growth, I think if you're in London and you don't have air conditioning, Tom, I imagine your activity is going to be lower than it otherwise would be.
John, just from the Telegraph here this morning, I was absolutely thunderstruck at 25 degrees Celsius at night. The doctors say that's the most important thing, John. That's an unimaginable 77 degrees in London at night.
Brutal, TK. One more day of it, and then it's going to get cooler over the next couple of days.
So we'll go next weekend.
It gets hotter here in New York City through today, that's for sure.
Road trip.
Go next weekend. You put that in the diary, Tom, after Frankfurt. And where did you want to go? Rome as well, to check in on Draghi?
I think we should go to Rome and be sure Mr. Draghi's feeling okay.
I bet you do. A little bit later, we head over to the West Coast because, Kaylee, we have to talk about Netflix earnings after the bell.
Yeah, this is going to be an interesting one, considering after the last earnings report, the stock dropped 35% in just one day. It's down by more than 2/3 just on a year-to-date basis, and we're expecting they lost 2 million customer subscribers in the second quarter. So the real question is going to be, does that get better in the third quarter, and how are they going to go about monetizing password sharing? There was news overnight that in Latin America, if you want to add an additional household onto your account, they're going to charge you for it. Netflix really trying to figure out how they can bring those dollars in.
Let's keep it on tech and go to Apple too. Kaylee, what did you make of that? It's next year. It's slowing hiring in some places next year. Are we making too much of a big deal of that?
Well, it is interesting how it was able to turn around sentiment in the entire market, given everything you just said, John, the fact that it is only some teams. It is slowing hiring. It's not outright job cuts, but you have to take it in conjunction with what we've heard from other big tech companies that are also slowing hiring, or even in the case of the likes of Microsoft, cutting jobs outright, at least in some teams. So all of it kind of adds up to a signal that even these tech giants that in theory are a little bit more insulated from macroeconomic pain are still bracing for it.
It's Apple, it's Alphabet. You mentioned Microsoft cutting. Tom Goldman, you'll love this quote. You will love this quote. We have made the decision to slow hiring velocity. Have you ever heard that one, Tom?
I've not.
We're slowing hiring velocity.
One of the biggest arguments I've had in the history of Bloomberg, John, and you know I have daily arguments, Christ, you can measure them by the hour, was over the language of firings, layoffs, job cuts, and everybody's struggling for new phrases here.
Well, why do we have to use, why do bank executives have to say things like that? What does that mean, Tom? We're slowing hiring velocity.
That means they're still hiring because they have to hire in tech or they're toast.
Exactly.
I totally thought Tom was going on a rate of change, second derivative.
That's what they're meant. That's what they're trying to say, isn't
Virginia
it?
calculus. We'd never get that from Bramo. I mean, Bramo, she's calculus free.
Tom made me do a calculus primer before I ever came on.
John,
seriously?
Real story.
Oh my God, Tom, what are you doing?
Yeah, John, Javier Blas, I'm literally writing it up, folks, in real time. That's the way we do surveillance, trying to keep up with it. Javier Blas, the giant. France electricity is something called base load, le load de base, it's called, John.
Nice.
Up 891% since the end of 2020.
Okay, we've got things to do. We'll come back to that in a moment.
Yeah,
Futures up 0.7 on the S&P, on the Nasdaq 100, up 0.6%. I want to hear more about this calculus course to get on Bloomberg surveillance.
It is.
Yields higher, just a little bit, 298.74. Euro stronger, dollar a whole lot weaker through G10. Euro dollar 102.52, Kaylee, and crude, let's call it unchanged, shall we? 102.41.
Yeah, still in triple digits, John. All right, calculus is not on my agenda today, at least no coursework or homework for Tom Keene, but there's plenty else going on today. At 8:30 a.m. Eastern time, we're going to get housing starts and building permits data. I am especially more interested in this in light of the fact that we saw home builder sentiment yesterday falling to the lowest level since May of 2020. The chairman of that NAHB survey talking about higher costs, higher rates, all of that meaning that we're seeing a slowdown in construction. So what is going to come out of these numbers this morning? Then after the bell, we mentioned this, Netflix will be reporting second quarter earnings. 2 million losses on subscribers is what we're expecting. Does it get any better in the third quarter? And how are they going to monetize more given all the password sharing that is out there? Again, that stock is down 68% on a year-to-date basis. And finally, the ultimate crypto plug here, just for Tom Keene. All day long, the Bloomberg Crypto Summit is going to be taking place in New York. Of course, we'll also have Bloomberg Crypto on at 1 p.m. Eastern time, but at the summit, we'll have the likes of Sam Bankman-Fried, Mike Novogratz speaking. I'll be moderating a panel with Yatsui of Animoca Brands at 2:30 p.m. Eastern time, Tom. I know you'll be tuning in.
I'm going to break the surveillance snap. John, I mean, I'm looking at Jack Mahlers. For those of you on radio, the guy's got the hoodie on. What do you think, John? Do I need a hoodie like that?
I've got
on here?
no time for that, but
Yeah.
okay. All right. I'm not going to comment.
John, this is the price of having lines on. We have to flog crypto all morning.
I appreciate it.
I'm happy to do that. Russ Kostrick joins us now to talk about equities and bonds, portfolio manager for the BlackRock Global Allocation Fund. Russ, you have been conservative through much of this year. You have not been constructive on the equity market. Has any of that changed in the last month?
Good morning, John. You know, I think the short answer is not really. We're still in an environment where you have the same headwinds we've had for most of the year. You've got tightening liquidity, which has been a huge headwind, particularly for the growth sector. You've got a slowing economy. These have not gone away. What I would say is that valuations are at a much more reasonable place than they were 12 months ago. Globally, you've seen multiples have compressed around 30%. They're down about 40% in Europe. So I think we're closer to a bottom. I think the market's in the process of making a bottom. But all of the conditions that led to the volatility, unfortunately, they have not gone away yet.
Russ, Julian Emanuel over at Evercore ISI gives me the first look with 11% of SPX earnings in. He's got a nice inflation revenue lift, but critically, he's modeling out earnings at 4.8% growth. That's not bad. I know things are down, but is the pendulum just overestimating the gloom?
Well, it's a great question. I think you hit on what really is the big issue going forward. Again, I spoke about valuations. That's been all of the losses year to date, all of the loss in the S&P. It's all been about that multiple compression. But to your point, what really is the issue going forward now is how much is the economy going to slow? How much is nominal GDP going to slow? And what does that mean for earnings? Earnings so far through the second quarter don't look bad. The real question is if we continue to see as a result of Fed tightening, the economy slows in Q3 and Q4, are those earnings estimates in the back half of the year realistic? And this is why I think the market is struggling to break out of this range.
Okay, so if equities are struggling to break out of a range, if you are not yet seeing the signal that we've actually reached a bottom, how much do you like treasuries here, Russ?
Well, the short answer is we really don't. We're still underweight, but we dislike them less than we did a year ago. You've already chopped a lot of wood. We've seen that real rates on the long end of the curve have actually gone back to where they were in the post-GFC environment. I still think you might have more pressure as the Fed continues to tighten, but you're starting to get better real yields. And I say really where we're starting to see opportunity is in the credit markets, in U.S. investment grade, in U.S. high yield, where the spreads have widened considerably. And if we're going to be in an environment where equities are going to be chopping over the next several months, one of the things you can do in your portfolio is you can add carry. You can add income. And right now, that's an asset class we're starting to see better value.
Are you making an assumption there, Russ, about how sticky inflation might be through the next several years, not just this year?
Well, we're certainly assuming it's going to be, difficult for inflation to get back to the 2% post-GFC norm anytime soon, which means that at some point, while the Fed may have to slow down, we're not envisioning a world where you're going to go back to this very easy environment of low interest rates, QE, which obviously was this huge tailwind for financial assets for the better part of a decade.
Russ, awesome to catch up. Russ Kostrick there of BlackRock, works closely, of course, with Rip Reader as well. Getting a little bit more constructive on credit at the moment, both investment grade and parts of high yield too. Take a listen to this, Tom. It's the Bank of America Fund Manager Survey from Mr. Hartnett. The quote was, "I'm so bearish, I'm bullish." Here are some of the lines. Record low growth expectations, record low profit expectations. It goes on. Equity allocation, the lowest since 2008. Cash levels, the highest since 2001. Tom, it is just packed with doom and gloom.
I just looked at an absolutely mediocre, world-famous mutual fund with garbage performance, and they're almost 9% in published cash. John, that's a rare occurrence.
What did you make of that line, Tom? Things are so bearish that perhaps it's time to be bullish.
That's part of it. Now, we haven't seen the catharsis. We've had some guests on saying, VIX 40 hasn't happened, et cetera. But nevertheless, many of the tea leaves that you look at on mood are really, really, I'm sorry, they're pretty grim.
We'll put that question to Sebastian Page in about 50 minutes from now. The CIO of T. Rowe Price coming up very shortly. Futures positive 0.8% on the S&P, a lift again on the Nasdaq by 0.75%. The lift yesterday morning did not stick.
Thank you, Mark Gurman.
It faded pretty quickly, and thanks to Mark Gurman for his write-up of Apple, who will slow hiring next year, but not in all places. We'll keep talking about that too. Yields unchanged, 298.37 from a beautiful New York City this morning. Good morning. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Rishika Gupta. The field is narrowing in the battle to replace Boris Johnson as British Prime Minister. Rishi Sunak and Penny Mordaunt were the top two candidates after Monday's voting by Conservative MPs. Another vote today will whittle the field from 4 to 2. A drive in the Senate to quickly pass $52 billion in grants and incentives for American semiconductor makers has picked up steam in Congress. Senate Majority Leader Chuck Schumer says the Democrats and Republicans are hashing out the final details. The legislation is a scaled-down version of a larger bill intended to make the U.S. more competitive with China in technology. And House Speaker Nancy Pelosi reportedly plans to visit Taiwan next month. That's according to the Financial Times, which says there are divisions in the Biden administration over whether Pelosi should make the trip. In April, China said a Pelosi visit to Taiwan would be a malicious provocation. Twitter has dismissed Elon Musk's complaints that he doesn't have enough information about spam and robot accounts. The company called it an irrelevant sideshow, and it urged a judge to hold a trial as soon as possible over Musk's cancellation of his $44 billion takeover. Shares of IBM are lower. Pre-market, the company lowered its forecast for free cash flow this year due to the stronger dollar and the loss of business in Russia. That overshadowed results that beat analyst estimates. Sales show that demand for mainframe computers, consulting and cloud services remains strong. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Is here.
Buzzwords this earnings season: recession, inflation, foreign exchange, layoffs.
We are starting to see, well, the world get a little bit more cautious about what these earnings are going to look like.
Bloomberg breaks the numbers first.
Second quarter earnings at Delta Airlines missed expectations.
When that inflation print hit, my eyes were on Amazon in particular.
With exclusive expert analysis.
The issue here really is elevated costs.
If you take a look at the projections, that is the story.
Bloomberg Television and Radio, the fastest numbers and analysis you trust.
This president has pledged to do all he can, you heard him just say that yourself, to ensure that we have an ample supply of oil to ease inflationary pressures, particularly at the pump.
Was Jared Bernstein, the White House Council of Economic Advisors. 4.95, Tom. We're south of 4.50 a gallon. The average gasoline price in America right now, they have been falling prices since the middle of June every single day, and it continues.
We see this in other commodities, too. I'm looking quickly at Chicago copper, John. I know you look at LME, but 334 is a stunning statistic. I'd also note, John, that even with the worry of the food crisis and David Malpass coming up, even the grains are somewhat quiescent as well.
They're getting less greedy, those companies, Tom.
Well, I don't
decided to be generous over the last month and just bring prices down for 35 days.
I have no idea what this headline means. Quickly, John, Heathrow refuelers
sure,
to go on strike later this week. That's just another inflation strike,
Katie spotted that one. Katie, how much worse is Heathrow going to get over the next couple of months?
It's hard to see how it can. You already have them restricting capacity for the summer, asking airlines not to sell tickets because they literally just cannot handle the passenger traffic. They've been dealing with these labor issues, and now a strike of the people who actually need to put the fuel back in the planes. I can't imagine that helps with the whole delay and cancellation situation that one of the busiest airports in Europe already was
I'll do a
with.
test run for us later this summer, Tom. Just for you.
Yeah, futures up 33. The VIX 24.69, still really constructive, I would say, even off the Apple Mark Gurman gloom yesterday. Emily Wilkins of Bloomberg Government with us right now on a Washington brief. Emily, we've got the Texas grid struggling. We do have heat across the nation. Washington's used to this heat, to be honest. How does the heat affect the politics of the White House?
Well, they don't call Washington the swamp for nothing, and certainly at this time of the year, it absolutely feels like it outside. I mean, Biden is really, when it comes to energy, it's very interesting to see the two sides that he's dealing with right now. Yes, gas prices are coming down, but they are still higher than most Americans are used to, and it still is an issue for the Democrats. Now trying to get the prices down, as well as going into November with the elections. When I talk with voters outside the D.C. bubble, that's one of the most common things they bring up. But on the other side, he's now facing pressure from the left, from Democratic Senators Jeff Merkley of Oregon, who met with the president the other day and said, hey, if this plan that we had with Joe Manchin to get a number of tax credits for clean energy is off the table, you need to go ahead and declare a climate emergency. And this would open the funding gates for Biden to be able to use funds on clean energy, potentially restrict the movement of some fossil fuels, ban offshore drilling. There would be a number of revenues open to him here if he decides to go that route. We know the Washington Post has reported that this is something the White House is considering. We don't know if or when an announcement will be made. But at this point, Congress is basically throwing up its hands, saying we can't do any more legislation on climate. Biden, it's all you now.
Emily, has that transition, has support for it got stronger or weaker in Washington and across the country, given what's taken place in the last 6 months?
I mean, to a certain extent, it has gotten a little bit weaker because folks realize that gas prices are just the #1 short-term concern. And there's a big push to address that in the short term. At the same point, you've got a lot of other folks saying, look, long-term issues, look at the recent reports we've seen, look at the recent warnings from climate scientists. We really do need to address climate. And that's one of the main things that President Biden ran on, one of the main things he won on. And now he's facing a lot of pressure from voters inside his own party saying, if you want us to turn out for the midterms, if you want our support, if you decide to run for president next year, this is an area that we need to see real action on.
Okay, Emily, so obviously there's the supply side challenge when it comes to oil, the administration trying to address that. There's also been a consistent supply side challenge when it comes to a shortage of semiconductors, and at least it seems we're making some progress on that on Capitol Hill.
Yeah, so we're actually expecting a procedural vote later today on a package that has more than $50 billion for semiconductor manufacturing, really encouraging companies to come to the U.S., produce these chips in the U.S. Although we are starting to see some blowback this morning, the Wall Street Journal's op-ed board noting that the semiconductor industry, it's not where it was a year ago when this legislation was first negotiated. You're actually starting to see the industry have supply meet demand a little bit better than you did. And the editorial board suggested that this could be a case of sort of corporate welfare, giving money to an industry that might not necessarily need it. And so it'll be interesting to see if that becomes a factor today for some of these senators who are going to be placing these procedural votes. Right now, the one message that we've heard from a lot of lawmakers is that they do think this funding is important. A lot of them can tie it directly back to industries within their states. And so I think it's a bit of a question mark on how this is going to play out, but right now support within the halls of Congress still remains pretty high.
Emily Wilkins, thank you, down in DC. Tom, some rare news for this president, a 35-day slide in gasoline prices in America. Some rare good news for this president.
I don't know how it's going to turn over into the polling and all that. I think front and center, and certainly for the zeitgeist of the media, is Mr. Manchin and sort of the stasis that we've slipped into, John. But given the heat, and I believe, John, for the next 5 days in New York City, it's what I'm going to call seasonally hot, not like the crisis in London. I wonder how they're going to be overwhelmed by events, including market events. John, this is incredible. This is a bridge, folks. John went to see Fulham Manchester United about 12 years ago and jumped off the Hammersmith Bridge in the Thames.
That's not what happened.
And okay, you were pushed off. But here, John, here it is. It's an impaired bridge, 150 years old, whatever, and they're wrapping it in foil so the cracks don't get crackier.
I tried not to go south of the river, Tom, so didn't use the Hammersmith Bridge.
Yeah, there it is.
But an amazing picture, Tom, of what's taking place.
Yeah.
Any more to say on that? You were very excited about this picture.
I'm not excited. That's the wrong word. But the tail risk here, John, of where this heat is in France. It's supposed to be 100 degrees in Paris. That's normal. But it's really shocking, John, what we're seeing in London.
It's rare to get days like this in the UK. I understand it will fade after today, Tom, and we'll get back to something a little bit more seasonal.
At least for now.
For now.
Yeah.
Are we done?
I don't know. I'm going to look at J&J just out here. Kaylee, thank you for that. Kaylee, tell us about J&J.
Well, on the one hand, you had second quarter COVID revenue up more than expected. It came in at $544 million. The estimate was for just south of $223 million. But the real headline here is that they've cut their full year earnings view to $10 to $10.10 a share. That's down from the previous view of $10.15 a share to $10.35. I'm looking to find the release here as for the why, but obviously we'll dig into those numbers a little bit more throughout the morning, Tom.
We'll come back to that in just a moment. Futures up 0.8% on the S&P. Your euro through 102. We'll talk a little more about what's going to happen at the ECB later this week. 25 or 50 from New York. This is Bloomberg.
You Meet Import Harcourts has stories about what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as